Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And tonight, manipulation, ladies and gentlemen. You will not be stopped, though. Getting your wealth now is mandatory. They're making it semi-easy for you, but you have to invest. We're going to talk about this. Snooze, you lose, and your legacy could be over within a generation because mortgage rates somehow are coming down as the United States prints more money. But we'll get into that shortly. And welcome to the SSN Nation Financial Friday Night Live Stream. Stop struggling now, gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get. All right. Welcome back, ladies and gentlemen. I want to thank you so much for being here. Please share the video because you never know where and how other people get information. Oftentimes, because there's so much information being bombarded on people, mostly negative. You have to remember that mostly those things that get those clicks that go viral has to be something outrageous, not something that helps you build wealth. And then when the financial literacy crowd jumps in, they start sensationalizing things and making it seem better than it really is. I won't give an example, but you guys know it's Financial Friday Night Live Stream and it's story night as well. So thank you again for being here. Make sure you smash that like button, give it a one piece so the YouTube gods know that you're in the house paying attention, because the first thing I talked about today was the mortgage rates declining down to 5.99%. That's still 6% on overpriced homes. So to make things simple, $600 is your mortgage for every 100,000. So if average price of a house is, I'll round it up, it's not really 500,000, it's in the 440s, 450s, depending on who you get your information from. But we'll round up to 5,000, 500,000. That means you're paying $3,000 a month for that 5.99% interest. But that's not all. That's not all. You still have property tax to pay. You still have HOA, if you have one. You still have insurance to pay. Now, in a lot of places, insurance could be anywhere from $300 a month to $700 a month, depending on what state, county, city you live in. So therefore, you could be around, we'll go $3,400 a month. You add your property taxes of 1.5, so you could be around $6,000 a year. So now you're going to add another $500, so you're up to $4,200. We haven't even started yet. But $4,200 per month, which means you have to make 3x, but they're going to allow you to make less. 3x means $12,600 per month, which means you have to make $144,000, just round it up to $150,000 to properly qualify. Now, mortgage rates going down means what? Means good news for only a few people. But before we get into that, there may be some people watching this tonight going, Eric, I want the wealth. I want that information. Fine, we can talk about that. But first, here we go. We have somebody who I do not recognize. Zabak the Midget. Interesting name. Welcome to the SSN Nation Financial Friday Night Live Stream. Very happy to see you in the house. He brings a simple tagline, bring it out. Okay, We'll see what happens next. Wiser the Most, also a name I do not recognize on this Financial Friday night live stream. I just want to welcome you here. Thank you so much for being in the house. And he says, yep, game over. I like this person also. He says, calls it like it is. If you don't get this wealth now, it is game over because they're trying to sell you liabilities. So therefore, you know who wins with liabilities? Your banker, the banks, the mortgage companies, because you have the IOU. They're not at risk. You sign the piece of paper. Their only risk is you don't pay, they take back the asset. That should appreciate in price because I have so much to tell you today. Because, like I told you before, the banks, corporations, they get different loans than you will ever think about. 2%, 1%, 0%, and not for 4, 5, 6 years. How about 15? Think about it, ladies and gentlemen. They get to build wealth a different way. You have to do it the old fashioned way. Use your hard earned money and buy stocks, buy home, which potentially goes up in value. Then you can get, home equity lines of credit. But the old fashioned way is almost over because it's plain and simple. They need to bring that 5.99% down just so you guys can possibly afford. And when they reduce the rate next month, that means it's going to be down to maybe 5.5, but it's all manipulated. So don't be fooled. But we're going to be out here. We have Gary Wolf in the house as well. Another name I do not recognize, but welcome once again to the SSN Nation Financial Friday Night Live Stream. This is where we talk to the general public, and that's why the name is Stop Struggling Now, because we want people to understand financial literacy is going to make sure you can even have a chance at winning. So thank you so much. He says, okay, I get it. Right on. I like that. Post-retirement travel. Another investors in the house. He's doing more than the trifecta, more than buying real estate to rent it out like commercial property. Smart. More than just investing in the stock market. Also option trading with the wheel option strategy. More than enough to cover there. Two things. And then offshore real estate and banking. Once again, outside the United States regulation, the trifecta, ladies and gentlemen. Not only that, but some people still have a chance to work for 20 plus years and receive a pension. Not once, some people twice. Talk about Cinco. That's what we're talking about. The trifecta was good enough. Cinco means he doesn't have to deal with whatever is going to happen. And we know where this is going. Well, new people may not, but we know where this is going. Now, he brings his tagline this evening. And once again, I want to welcome post-retirement travel to the Financial Friday Night Live Stream. And he's buffed up with that member icon next to his name, which I humbly appreciate. And he brings his tagline. Hello, all. Let's do this. That's what we do here. That's why you need your pen, pads, and papers, because you never know what's going to happen, because he has said it best. Stock market on fuego. He's going to be saying that all 2026. So you better get in sooner than later to build up. Whatever disposable income you have, you need to put a portion of that towards investing in this great stock market. It's not rocket science. The S&P 500, they said, check me out, because we're breaking records today. Dow Jones, just chill for a second. You broke your records earlier this week. All-time high. We're going to break our all-time high. And I do recall in 2024, we told you all what Amazon was going to do, what Microsoft was going to do. Did we not tell you buying back their own shares of stock of billions of dollars in itself was going to create the markets to move up? A bunch of The top 30, let's just put it that way. The top 30 buying back their own shares of stock. We knew this was going to happen. This is not rocket science. That's why you had 3 years in 2024. And then now you only have 11 months and 21 days to make sure you get your assets in order. And a lot of them. These include stocks. This includes dividends. This includes a lot. But we're going to get into something else because the stock market's going to be on fuego all year. And especially since we have a president that is business oriented and he doesn't really care about you. What he cares about is, you know, those guys that are going into the Oval Office and bringing gifts like Apple, Nvidia, Cisco, Oracle, Tesla. Yeah. Did I just give you some names that you might want to be paying attention to as investments? I'm just asking for the SSN Nation. Remember, bring that pen, pad, and paper. And remember, Vanguard Group, VOO, VOOG, VTI, VGT, all year long. All right, okay, SPY, all year long. QQQ, all year long. You guys have heard us talking about this for the last 3 years. Come on now. 4 years, actually. Just saying. Now, let's move along because I still haven't gotten to the manipulation part. Here we go. The world above. Very, very happy to see you and welcome to the SSN Nation Financial Friday Night Live Stream. A little asset talk, a little debt talk, a little improvement on what you can do talk, and we still need those dividends, ladies and gentlemen. JP Morgan, I don't mind the 10.5% return from JEPQ. I don't mind that. I don't mind the real estate investment trust are about to do what they do, because did I not tell you guys they were going to manipulate the system so mortgage rates can fall down? Did I not tell you this? Therefore, that's why I told you I love real estate investment trust whenever they start acting like this. Why do I like it? Because if you don't like 13% AGNC, that's right, 13% annual dividend by investing in real estate investment trust, AGNC. Okay, fine. You say, Eric, I want more. Okay, remember when I was talking about IVR just last, Wednesday? But remember the other ones, ORC, PSEC, MFA, ARR. I mean, the list goes on and on and on. Guess who's going to benefit a hell of a lot? Wait till I show you this, ladies and gentlemen. But once again, the world above tagline, shock of the hour. That's right. Manipulation is no shock, being facetious, because, ladies and gentlemen, this is how you win. You can sit on the sidelines like your coworkers and put it in a 401k and then let them manage whatever for you. And they're going to give you, in fact, is there anybody watching this right now? I want to hear if anybody's gotten any paperwork from their 2025 401k. As the stock market all-time record high multiple times all year. And I'm hoping they don't tell you something like you earned 7.5% this year, because if they do say something crazy like that, I would highly suggest you go take your happy ass on that and say, you know what? I need my 401k. And you know what they're going to say at the office? They're going to say, hey, don't you know you're going to have to give up like 25, 30% of this? If you do this, you'll have a penalty. I'll say, well, Eric told me, he's a YouTuber. He said, I should go to Fidelity, manage it myself, and tell Fidelity I want my own self-managed 401k, so therefore send it over there so I don't get a penalty. I think I want to handle this right now. I can't handle no 7.5 or 8.5 or 9.5%. Are you serious right now? And they're going to go, oh, hold on now. Who are you talking to again? Yeah, send me my money over there. Here's my account right now. I already done set it up. Here's all in the instructions. I'm not going to incur no penalty. 401k to 401k, no penalty. Sorry. You're not catching me like that. Just saying. All right? So, after you do that, you manage how much in dividends you want to get per year. I just named some stuff that you're going to be over 9, 10% already. So when somebody comes to you and go, hey, aren't you happy that we got you 8% this year? You're like, I could have did that myself. What do I need you for? And I'm giving you like almost 1% or more of my profit? Unnecessary. I think I'll keep all of it. That's right. Don't worry, don't worry. Your coworkers are going to look at you like you're crazy. They used to do that to me too. They'd be like, this dude's crazy. I was like, crazy? You're crazy. You're happy here sitting there talking about 7.5% when I got 15. Prove it. At the time, I had to break out my Franklin Templeton and all this stuff. I'd come to the office, see story night. And I'd be like, what does that annual statement say right there? And what does the one we have here say? Yeah, twice as much profit. Sorry, ladies and gentlemen, this is how it works. So shock of the hour. But anyhow, let me get to something right now, because before I get into this, you guys know how I get excited, especially when we know we can win, when they're manipulating the system. So here's the article today in CNBC. You do see this on the screen. I'm going to actually make sure that it goes full screen. But I just want you guys to see this because mortgage rates dropped to lowest level in 3 years. As Trump orders buying, notice the manipulation is coming. Orders buying 200 billion in mortgage bonds. Ladies and gentlemen, you do understand we're $40 trillion in debt. We're running a deficit of over $40 trillion. We're broke. Just like 80% of the population living paycheck to paycheck, except it's even worse than that. The United States ain't even living paycheck to paycheck. They're broke. We are broke. So therefore, they need your tax paying money. They need your capital gains tax that you pay. They need every last dime of your money. And that's not enough. So what they're going to do is print more money. So in order to do this, the manipulation, they have to print more money. That's the first phase of this. We're going to get into it a little bit more so you guys know what you're playing with out here. We'll get into some other things in a second. But just remember, FHA, USDA, loan rates are not 5.99. Just saying. You can get an FHA loan for a duplex, a triplex, or a fourplex, and your rate could be a lot lower, almost half. Just saying. All right, let's get into this, shall we, ladies and gentlemen, because this is important. This is how you can build wealth when it makes sense. It's about to make sense here shortly, because you know how people are. When the mortgage rates drop, people all of a sudden lose their mind. It'll be 4.75. That's about where it goes. It will drop down to that. And what's going to happen? People will start buying overpriced homes. I highly suggest you sit back and watch. Okay, that's all I can tell you right now. But notice the number: 200 orders buying $200 billion. Here we go. Most analysts predict a drop of about a quarter to a half a percentage point in mortgage rates. In fact, you know what I like to do? In mind, if you don't see the live chat and you make sure that you tap the first comment, swipe left or push it left, and there'll be options. Hopefully you'll get the option to go to the live chat. So then you can get these links that's going to be in the chat room. All right. Now, let's get back to the situation at hand, the manipulation. I think psychologically it will help. Oh, manipulation. There you go, said Zellman. You're damn right. When they say mortgage rates come down, people start listening. Home builder stocks are rallying on the news. You know why they're rallying on the news? We're about to find out. Remember, I told you these guys have special rates. They don't get a 5.99. When you go and they say, oh, yeah, give us an extra $50,000, we'll cut your mortgage rate down to 4.99 for 5 years or 2 years or 1 year. You know why they're doing that? I'm about to show you, because they let it out and the cat out of the bag right here that I told you guys all the time what they do. Check it out. Mortgage rates fell sharply, of course, because they're buying $200 of mortgage bonds. Ladies and gentlemen, bonds, just like when you buy bonds, treasury, and bonds from the United States, that's how they print money. So when Japan says, I'm going to buy $1 trillion worth of bonds, America gets to buy $1 billion or $1 trillion or create $1 trillion of money out of thin air. But here's the problem. The United States citizens and the United States have to give them 4 point, let's call it 1% annually interest. Where's that interest money come from, taxpayers? Feels like Sesame Street or something. Come on. You guys know hold on, you're paying it. Your grandkids are paying it. Your children are paying it. Your cousins, your aunts, your fathers, your sons, your daughters, everybody for the next however many generations get to live paycheck to paycheck before it's over. They have to pay it back, and there's no way to pay it back. But they're still doing the manipulation. Why? Because the government and the builders and the mortgage guys and the financial institutions all benefit from this. You get to benefit from this while you're getting your wealth game on by investing in, you already have a clue, home builder stocks are going to rise because mortgages are going to be able to be produced. Now, let's get on with it. I didn't just pull this out. I read parts of this already. The rate on the 30-year mortgage dropped 22 basis points down to 5.99%, matching the low from February 2023. All right. Fannie Mae, Freddie Mac, which are government conservatorship, do not originate home loans. Do you not? I'll repeat this right here. Speaking of manipulation, once again, Fannie Mae, Freddie Mac, which are government conservatorship, do not originate home loans. Here's how it works, ladies and gentlemen. I can't even believe CNBC let this out of the bag. They buy loans from lenders. Notice the next part. Bundle them into mortgage-backed securities. You know, PSEC, ORC, ARR, all them stocks, some of them are mortgage-backed securities. Yes, ladies and gentlemen, are you getting it yet? Bundling home loans together. Remember those pieces of paper? Those are home loans. Nobody has paid $500,000 per home. But guess what? That piece of paper is worth $500,000 per home. Right? They're the ones collecting the mortgage through probably another entity. But the point I'm trying to tell you is, notice how you create money out of thin air. And then somebody gets the value of $500,000 and there has not been paid $500,000. A second derivative. Oh, I love this. Or MBS, mortgage-backed securities is MBS, and sell them to investors. I just mentioned those: AG&C, ORC, IVR, ARR, MFA, just to name a few. All right? Thereby replenishing lender funds for new loans. You see the pond's eye? Notice replenishing lender funds for new loans and keeping interest rates lower and more stable for home buyers. The liability. All right. Do you guys see the gameplay yet? You see how you're being fooled into getting these, and then they're going to turn around and tell you your insurance for next year, your premiums. And you know what a lot of people do? They have their insurance included in their mortgage. So now when your mortgage is $4,200 and then the next year it goes up $300 to $4,500 because you were all happy that you got a 3%, 1% or 0% increase in your paycheck. You said, "Oh, I got some breathing room." They said, "Hold on, son. You don't have any breathing room because not only did your insurance go up, your property taxes is in your loan also. And your property tax just went up another $200 also per month. So now you're paying $500 more per month. Your mortgage is $4,700. Are you winning yet? The only reason you could win from baby boomer status is because guess who did this? Ronald Reagan. Up until 1980, this is why some people are the most dangerous people in America. Up until 1980, home prices only went up 1 to 3% on average. That's it. It was a non-issue. But in 1980, tax cut, tax breaks, and this manipulation of mortgage rates, so prices would go down, and that resulted in late 1980s savings and loan crash. Then they said, who cares? We'll just keep doing it again. And then 2007 and 8, Great Recession, crash. It seems that they don't care. Oh, by the way, if I lose, something happened on Friday for the first time ever. Video and audio was shut down. That's a first. They've never done that before. Tay, 9130, welcome to the SSN Nation Financial Friday night live stream. Man, it's story night, but I'm very happy you're here. Very interesting. That's exactly right. So what do you guys have to do? You want to be in that FHA if you can. Don't buy a home. Try to get at least a duplex, a triplex, a fourplex if you can before it's too late. We're going to get into, there's more, ladies and gentlemen, and why it's going to be too late. This is what I'm saying. This is how they speed up the game for them. You have to catch up because a lot of people don't know about this, right? New sub, thank you so much, Fert, and welcome to the SSN Nation Financial Friday night live stream. I greatly appreciate it. And says new sub, that's right. Everybody, please subscribe to the channel. Click the all notification bell because it's financial literacy night, and you got to be dangerous from now on. You can't keep playing with these people out here. The rich guys are always going to be rich because they're able to buy all of these derivatives that I just told you about. Pieces of paper that gives them double the money. In fact, anybody that doesn't understand mortgages, whatever you buy your house, if you buy a $500,000 house, 25 to 30 years ago at this, well, actually it'll probably take 25 years at 5.99, but 5.99% is probably 25 years. You paid $1 million. That's right. Double, ladies and gentlemen. If you carry that note for the full 30 years, it's double. Just keep that in mind. So when people bought their house in 2020, it's 2025. They bought their house on average $250,000. Their house, they paid 500 G's for it. All of that insurance money you don't count. All of that property tax for the last 30 years, 25 years, you didn't count. You just ignore it. All of the rehab you had to do. Something happened, right? Things happen. Generally, somewhere starting around 12 years to 15 years, things start happening. AC units go out, you spend 5, 6 G's. You don't, that just goes out the cost of living at your house. You just dismiss it, right? Pipes blow up somewhere, you dismiss it. Water heater goes out, you dismiss it, right? You don't care. You're damn sure your house better be worth over $1 million because that's what you paid. That's the problem. You think you got away, but you did because now your house is worth $1 million. You get to sell it. You have cash. And what do people do? They buy equities. Very smart. Why wouldn't you take $300,000 or $400,000 or $500,000 and get your 8%, 9%, 10% per year without doing anything? And your stock prices go up because you bought the big dogs, right? Then you bought some dividends stocks, right? So you're good. There's an advantage. Some people can't afford to buy a new home now, like the Gen Z, Gen Xers, whatever they're called. If you're under 35, how many people under 35 is making $155,000, $160,000 to $200,000 a year? Not many. They're going to be priced out. You follow where this is going, right? Okay. Just making sure you guys are tracking this because we're about to get back to something because I see we have a lot of new people I haven't seen before. Very happy, LOL. Very happy. Hold on a second. I see Zabach. Nope, the midget. He was in the house. Thank you so much for being here, man. Once again. All right. Let's see. Loper 2680. Very happy to see you in the house tonight. Welcome to the SSN Nation Financial Friday Night Live Stream. A lot of you would be saying, I have to be remiss here. I was messing up, ladies and gentlemen, if you've been here for the first like 30 minutes, because lots of you watching need help. So let's just get to it. Findhelp.org. Yes, findhelp.org. Thank you to Matthew Lesko. That's right, the legend. 50 years helping people with grants and helpful information. So that's why you go to findhelp.org. Under that, you can get, hey, your car broke down. You need some car money. You can't pay rent. You need some rent money, mortgage help. You got that. You need job training. They have that. You need caregiving help. You got that medical. They got a lot of things. You put in your zip code, ladies and gentlemen. This is where you go, Americans, to help you. That's right. Just go check it out. Now, the second part to this. Cinco, Terry Vell. That's right. Cinco, number 5. Cinco, welcome to the SSN Nation Financial Friday Night Live Stream. Very happy to see you as well in the house. All right, look at this. The Spy. Oh my, Joshua Tree back in house. Thank you so much. SPY, you got that right. We don't spy for the government. You know why? Because we want you to have real estate or business and or definitely a bank account outside the United States jurisdiction, because they're going to be looking for money somewhere down 4 or 5 years from now, and they're going to be taken out of your bank account, not mine. I'm not talking about SPY at Joshua Tree. SPY, SPY, the stock. That's what's all-time record high today, by the way, ladies and gentlemen. We told you guys to do this, just like post-retirement travel, Mr. Worldwide, too. We were saying this along with several other members of the channel. Hello, all. David Jackson, welcome to the SSN Nation Financial Friday Night Live Stream. We're talking about mortgage tonight. We're talking about building wealth. But first, I forgot about putting in the findhelp.org. In the chat room, I put something in there for you guys. The link is there so you can go and check it out. Put in your zip code. See the all kinds of places where you can get some help, because 80% of you watching this are living paycheck to paycheck. So don't even try to front on me. And by the way, the numbers don't lie. Again, I know everybody gets tired of me saying this. 60% of Americans live with $500 or less in their bank account. 70% of Americans don't even have $1,000 in their bank account. So naturally, 80% of Americans living paycheck to paycheck makes sense. So what do you have to do? Reduce your debt should be mandatory. So I have to put that out there as well, because we have help for you. You want to reduce your debt without filing bankruptcy, without doing debt collections, without filing any other paperwork, debt consolidation, debt resolution. Let them get your debt reduced, just like what I'm about to show you on this article right here. But G Cart, welcome to the SSN Nation Financial Friday Night Live Stream. Thank you so much for being in the house. And everybody smash that like button so the YouTube gods know that you're here, because they don't like showing any love for us. Just so you know, you have reached the underdog zone. They don't want this information because, I like to tell it real. That's why it's dangerous out here. Everybody else does this fluffy pieces. We don't do fluff here. We do the real deal in this house. It's real out here in the field. All right. Now, let's go. SPYM is the cheaper version of SP500. Mr. Overtime Wayne, nice. And welcome to the SSN Nation Financial Friday Night Live Stream. I want to thank you so much for being here and mentioning SPYM. Another option, a little bit different, but I love it. Okay, in this situation, very, very nice. Okay, Zabak, the midget. Yes. All right. Thank you, man. Once again. Oh my, more. Welcome to the Terror Dome. Come on down. The world above said it best. Hey, man, I got to get that. Hold on. Let me see. Welcome to, I can't do it. Welcome to Might be able to do it. The Terror Dome. I love that, man. SSN Nation style. Right on, man. I love it. And welcome to the SSN Nation Financial Friday Night Live Stream. By the way, it's what we're doing. Nice. Thank you so much, Tay. Very happy to see you. Let's go. Who's this? Angels Nup Nup 7. No more prison. I like that too. Welcome to the SSN Nation Financial Friday Night Live Stream. 5% dividends? I don't know, man. I don't like 5% dividends. You know why? Inflation is higher than 5%. Now, of course, hold on now. Now, of course, if you have a million or two or three or four, then 5%, okay. I mean, $1 million, 10% is 100,000, and then 50,000 a year is 4,400 thereabouts per month. It's going to be harder though to live on $4,400 per month if you're worried about mortgage situations. So why not just get JEPQ, JP Morgan, one of the largest banks in the world? They give you an ETF fund that's going to give you 10%. So why not collect 130,000 or 110,000 a year and still hold JP Morgan, JEPQ? Just saying. Or you can go with the lesser one, JEPI, and collect about 7.5% at least. Every month you get dividends. So I don't see a problem with that. JP Morgan is too big to fail. Kind of safe. Just saying. I don't mind your 5%. I'm just saying. But it's very hard when I heard about what I'm talking about tonight. When you have mortgage backed, the market flew today, says B. Livingston. Yeah, it's very hard. Welcome, B. Livingston, to the SSN Nation Financial Friday Night Live Stream. Very happy to see you in the house. And if you guys like to subscribe, please do so. And now we have our memberships back. Oh, yeah. If you'd like to become a member of the channel, please do so. That's a monetary number. Otherwise, subscribe to the channel, please, and click the all notification bell just so you're in the house. Let's get back to this, because I was going to say this 5%. Why would I do that knowing what the mortgage guys are doing? Why would I not go to AG&C, who's at least at 13% right now? Why wouldn't I go to ORC, who's at like 15, 16% right now, dividends annually? Why would I not go to these places and enjoy the ride at somewhere between 13 and 16% annually? And guess what else? For life. Because you will still be getting that same rate because you bought the price of the stock at today's price, not 3 years from now price. They'll still be giving you a dividend. As long as the dividend's the same amount, you'll still be earning that same 15%, 17%, 13.5%. And the stock price might even rise a little bit for you. So you get a little appreciation with that as well. I know. It's dangerous out here. Not really dangerous. You got to know what you're doing. Post-retirement travel, he's in the house. USA to potentially control 40% of the worldwide oil with the addition of Venezuela. Very good for both countries, hopefully. You know what? I'm going to make you guys a video about this oil. You guys are like, damn, this guy can talk about the oil thing. Yes, ladies and gentlemen, this is not a good thing. Let me put this in perspective for you. Hold on. I won't do this today. I won't do it today. I'll just give you, I was going to show you a graph. Okay, here's how this works. Oil that's in the ground in Venezuela, whatever oil they have, it is, the Russians have refinery there. China has a refinery there. Venezuela refinery. USA has Chevron only employs 20 people. All right? 20. That's it for Chevron. ConocoPhillips and ExxonMobil, they exited when they nationalized it in the early 2000s. Okay? So, the situation is this. I don't know what you guys have been paying attention to, but maybe you understand that there is new sheriffs in town. Hybrid EVs, EV vehicles, oil for gas is not going to be a thing. The United States petrodollar since 1972 is based on the agreement that all oil would be exchanged in US dollars. So that's how the US dollar got backed. But now countries are going, we don't think so. This is why the Russia oil or Russia embargo on oil was meaningless, because other countries will take rubles for oil, and vice versa. When Russia sells oil, Russia will accept their currency. This is why BRICS has formed, so they can have their own currency. So therefore, the oil is worthless. This is why the mad rush by the billionaires to get their hands on some oil, because time is running out. That does not help you unless you're in the oil industry. And by the way, taxpayers, you do know you pay subsidies for them to get every year. Taxpayer. You also know, taxpayer, when the GOP gave you that big, bad, beautiful bill, you also are helping them get tax cuts and tax breaks, and you're paying for their tax cuts and tax breaks while they get the billions of dollars. They're not sharing that with you. So even if America was able to pull this off, which again, this has caused a problem, because now the terrorist situation, again, you have to be very careful. Is this terrorism when you go and kidnap a leader of a country and then try to take over their country? What is that? I don't know. But again, other players in the world have every right to keep their oil that they're refining in Venezuela under their agreement, correct? So now when somebody says we're going to move on the oil, they're like, hold up, Russia, China, and all these guys are like, oh, hey, wait a minute, man. So again, boots on the ground are going to be held by who? Come on, American citizens out there in the rural farm areas that you can't find a job and have no livable wages and don't have health care. You might sign up for boots on the ground in Venezuela to do security peace force. You know how that always goes. Americans die. All because the rich guys want to control something while it's in their lifetime. All right. That's all I got to say about this. I am never happy about anybody. This Iraq stuff, how did that work out? How about the Iran stuff over the years? How about Kuwait stuff? How about Saudi Arabia protection and all this nonsense? Meanwhile, Saudi Arabia and Russia are friends while you're over there protecting them. China's friends with Saudi Arabia and Russia, and you're over there protecting Saudi Arabia. Come on, man. Americans, stop playing with yourselves out here. You're getting screwed. They're not sharing none of the wealth with you, but you're going to have people shilling for these same rich dudes and corporations. Meanwhile, you're the one getting stuck with the bill. Oh, by the way, who's going to pay for that military action too? Just saying. That is right, sir, says Shayla. I don't know how to pronounce that, which is highly unusual, but I love the name. And welcome to the SSN Nation Financial Friday Night Live Stream. And I thank you for that. That is right, sir. I appreciate you mentioning that. So we're going to get back into the stream at the moment. Mortgage rates, That's right, world above. It's And by the way, I want to say something else as well, because a lot of people are confused because they get gaslit in America. Trump goes over there, kidnaps somebody. That's terrorism, in case anybody doesn't know this. Somebody bombing boats off of somebody else's coast, that's terrorism. And you guys just sit by going, what? I'm like, hold up, man. What is this going on? You guys know this is against all international laws, rules, constitution, everything. And you guys are like, I don't care. We're just going to be more in debt, Eric. We're just going to be happy to pay it because you know it's patriotic. Right. Have your bank accounts outside the United States, get a business outside the United States, or get something outside the United States where you can make money, bank accounts, cards. And by the way, let me give you this. My crypto Visa card has not arrived yet. I'm expecting it to arrive in the next 4 or 5 days because I did check my mail today and it did not come. But it does not matter. It usually takes 2 to 3 weeks. I ordered it over Christmas time on December 14th, but that was online because you order the Visa debit crypto card online. And this card is a Visa prepaid card that uses crypto, just so everybody understands. It's called the Bancus card. All right. They have Zoom calls every Tuesday and Thursday. You can make money because if anybody refers people to here and buys a card, you get a little, I don't even know what it is, 3 or 4%, or no, I don't even know what it is. Quite frankly, I don't really care about that. It's because this card is in Mexico City outside the US jurisdiction. So if I send my crypto from my online stock trading to that card, United States, there's no exchange stuff to deal with, right? It's out of their jurisdiction, onto there, and I'm happy. All right. I don't want to be caught up, ladies and gentlemen. Just saying. All right. Broke as a joke, says Loper. Exactly, man. It's going to be that way out here. Okay, here we go. Tay 9130, get the door dashing and save up. Hey, that's one of the options that people have. Come on now. That's why Uber, Lyft, door dashing, all that, people get their extra, 100, 200, and they can partake in making investments every day or every other day or every Wednesday or whatever it is. That is the thing right there, ladies and gentlemen. Thank you so much, Tay. That's a solution to the problem. One of the problems in order to build wealth, short the market then. We can't short the market world above. It's not going to short. The market's going to keep rising. You haven't been paying attention. It's already in stone. It was in stone 3 years ago when Microsoft, Tesla, Amazon, Nvidia, all of them, they were saying they're going to, over the next 3 years, they're going to spend 15 billion. Just 3 companies were going to spend 15 billion. Never mind everybody else. They're going to be spending like 50 to 100 million dollars buying their own shares of stock. The top stocks on the market indexes, NASDAQ, Dow, it's only like 30 stocks. I mean, that's what moves the whole market. And so that's why they pop. That's why you need to have invested in them in 2024. We started talking about this 3 years ago. I had a countdown of 3 years. We're now at year 2. There's only 1 year left. They're buying back their shares of stock. This is why we're going to have all-time record highs. But now it's going to be on steroids. And here's why. All right? We're about to show you right now. They don't care about us. That's exactly right, Tay. They don't. That's why you have to ride on their coattails. If you don't ride on their coattails and get left behind, you're screwed. We're already at 80% of people in America are living paycheck to paycheck. And in fact, anybody watching from Canada, your number is even worse. 85% of Canadians are living paycheck to paycheck during the month. So you understand there is a decline. You can't short the market in this situation. It's already in stone. And when they reduce the interest rates, and I'm about to show you something else, because this is what I was talking about before, long ago, 5, 6 years ago, because they're giving out the bag on this article. The whole game is in this article, but people don't understand because they know nobody's going over to CNBC and checking out this article. All right. Did you research covered options? No, I didn't, man. I was traveling over that. Oh, man, it was bad. It was bad. I had to stay overnight, and man, I couldn't get no sleep. A buzzer was going off in the next room over, and I was like, is this really like 3 a.m? Called down the front desk. Hey, is there anybody in the next room over? I think somebody left their alarm on or something. They're like, oh, we're full. I'm like, what? No. I was like, dang, oh, well, at least I don't have to worry about what time I get up and stuff like that. So I was like, next day, I was like, oh, good. Maybe I'll sleep tonight. No, wrong. Buzzer. Oh, man, bad. No, I did not. I've been doing some other things, but I've had a lot to do. So thank you so much, MDA0214, and other investors in the house, ladies and gentlemen, and welcome to the SSN Nation Financial Friday Night Live Stream. I want to get back to this because I don't want this lost because somebody said short the market. This is why you cannot short the market right now. All right. Now, here's where we start getting interesting. Purchasing more mortgage-backed bonds or securities does move mortgage rates lower. How do we move the rates lower, ladies and gentlemen? You still haven't told us how you're going to do this, but it's going to come up. All right. In the first 2 months of the COVID pandemic, as markets reeled, the Federal Reserve purchased $580 billion in mortgage-backed securities. You guys remember? You remember we were talking about these same mortgage-backed security companies, and they were giving out 15, 16, 17% dividends at that time. Welcome back. If you buy when their stock rates are lower, that maintains right now is when you have the opportunity. You already know what's going to happen. It then continued buying more throughout the year. Okay, so what? That's just more money. But look at here, ladies and gentlemen. March 20 through June 2021, the Federal Reserve increased its agency's MBS holdings from 1.4 trillion to 2.3 trillion, according to the Dallas Fed. Okay, here's where it gets interesting. This is why the big boys, the home builders, and all these guys, I told you guys this, they get special deals. Look at here. The Federal Reserve also lowered its own lending rate. Does this say zero? I believe that says zero. Does that say zero? You understand now why the builders and everybody else gets to go cuckoo crazy because they can get loans that you will never, ever see in your lifetime. They have lowered their own lending rate to zero. The Federal Reserve. Is there somebody watching this right now that can get a 0% loan for commercial or stocks? I want to know. If you're in this house right now, please let me know. Okay. The combination brought the average rate on the 30-year fixed mortgage to record lows, hitting just 2.75% at the start of 2021, according to the Mortgage News. What happened in 2021? You see how they reduced the manipulation? 2.75%. So all these guys that you thought you were getting a great deal, they were like, oh, thank you so much, man. They gave me 15 years, 0% interest, 20. And by the way, they're going to extend it as well. When it comes up around 10 to 15 years, they say, hey, man, do you mind if you renew this for me and give me an extra? And they'll say, well, you got to give us a point. Fine. And then we'll have to make it 3.4. Is that fine? They're going to fine. Things cost more now. Who cares? And then we can give people a buy down rate of the interest. Just saying. All right, you guys getting it? They told everything right here. They told everything. Now you get how you've been bamboozled because now the interest rate drops. Now people buy homes for more. Everybody wins in the financials and the home builders, and you should be investing in them. All right. How big is a deal? 200 billion. This depends on a few factors. But again, that's all I wanted to show you guys. All right. That's all I want to show you. But here's where they're going. They're trying to figure out how much 200 billion of mortgage-backed securities purchases could drive a 10 to 25 basis points reduction in mortgage rates, potentially reducing the current 30-year headline mortgage rate to 6%. Right. They were talking about 5.99. But see, now they know they can do the same thing they did before. The $1 trillion gets you 5 times the number. So they know they can get you down into the 4.75 range because they know that number right there starts people buying again. While still elevated relative to the average outstanding mortgage rate of 4.4 and 3.25 levels as recently as 2022. So there you are. If rates were to drop even to 5.9% for someone buying the median price home, which is around 4.25, there we go. There's their answer, 4.25. According to the National, using a 30-year fixed mortgage rate with a 20% down payment, the monthly payment would only drop $118. What did we tell you? That's how they get you in the door. And by the way, they're not going to care you doing, they're not going to do the 30%. They're going to put you in jeopardy. They're going to make sure you can borrow at 35 to 40% of what you make. And just so everybody understands, that means you are in jeopardy. Home loan defaults are in that range above 32, just so you know. Okay, 28 to 30 is safe zone. That used to be the old fashioned way. But guess what? Most people can't qualify on that up to 30% anymore. So the mortgage guy said, well, why do we care? As long as we have paper, we sell the paper to somebody else. It's guaranteed by the government. Why do we care if they default? We still get our money. So all we need to do is sell the paper, sell loans, get the loans. Who cares if they default? We get paid. It's guaranteed, backed by the government. We don't really care that mortgage-backed securities. Who cares? That's why people breathing and they change the rules with credit. All of this is designed for who? Okay? Now, I will say this. There's one thing that's happened over the years ever since Reagan, and that is because you can manipulate the rates to drop. If you buy your home, like, for instance, now, if you were, I don't know why you would, but if you decide to buy a home now and you have it $425,000, I don't know what you can buy for that, but I'll bite a 2,000 square foot house or something. I don't know. But the fact of the matter is, they don't care because they know that $425,000, as soon as they get into the fours, they now know people will overpay. And they also know you guys will let them give you a 35% up to 40% of your hard-earned money to pay for a roof over your head. That fear of missing out. But they also know why the fear of missing out occurs, because when that happens, the 425,000 could turn into 550 as they reduce the mortgage rates. So now the property value goes up 100 to 200,000. So people go, ha ha, equity. And they're going, ha ha, home equity line of credit, sir? We know you're living paycheck to paycheck because we designed it that way. We gave you 30 to 40% of your what you earn to pay for this thing. And we didn't even include your property taxes and insurance. So we already know you're screwed. So you're going to be living paycheck to paycheck and you have to have a job. And if you fail, then we know we get the house back with $200,000 to $300,000 of equity. They know how this works. Okay. So think about it, ladies and gentlemen. And oh, by the way, let me give you guys another clue. If you decide to buy a house, always buy upscale luxury gated if you can. All right. Even if it's upscale luxury gated, even if they say, hey, we're going to give you it doesn't matter. A 1,500 square foot house costs $500,000, let's say. But that upscale luxury location adds appreciation at a faster and higher rate. Just so everybody understands this, all right? I haven't talked about this lately. I used to tell everybody to do this. Do not just buy an ordinary house in an ordinary neighborhood. I would not advise. Yes, prices do go up because of its manipulation, but I just want you guys to understand. I better get back on the screen here. Just so you guys understand. If you can afford it, make sure you guys get on that train, all right? Now, I just had to show you guys. Oh, you know what else? I need to get this in the chat room. I'm going to put a link in the chat room so you guys can read the whole thing to make sure you read this right. Okay? I don't want you guys hiding out. Okay? Here we go. I want to point out, here's something. This is not enough to really get the market going because we know people can't qualify even at 4.99%. They can say the mortgage rates are going to go down to below 5, but we have people that still can't qualify at 4.99. So I think there's more work to be done. What did I tell you? It needs to be 4.75 or lower. And when it gets to 4.5, people lose their minds and they now can afford a much more of a house and they take advantage. They say, oh no, I'm not going to get that 2,000 square foot house that's 500,000. I'm going to get that 3,000 square foot house for 575. And then the next person goes, well, I'll pay 625. Next one goes, I'll pay 650 because I can afford it. Now the prices start skyrocketing. People go fear of missing out. And the next thing you know, there's a rug pull as usual. All right. I'm not going to get into this anymore because this is how you build wealth when you can. And oh, by the way, remember about 5-6 months back, I was mentioning to you, watch land. Joshua Tree. Oh man, you're going to have to watch the replay. Okay. Normally doing debit spreads to get started. Cart. Very well said. Okay, nothing wrong with that. Exactly, says Wiser the most. We all agree. Grow my bag. Kamikaze, welcome to the SSN Nation Financial Friday Night Live Stream. No matter where you're watching from, all over the world, I hope by now. Maybe they released all over the world after 6 years. But nonetheless, smash that like button. Give it a one piece. No matter where you're watching from, please subscribe. Please like. Please kick the heart, the check box, or whatever it is, and subscribe. No matter where you're watching from, make sure you get the news because this year is going to be one hell of a ride. Grow my bag, Kamikaze. That's right. Zach Zabach, the midget. I was saying Zach the midget, but it's Zabach the midget. All right. Thank you. Didn't know that though. Exactly, man. Exactly. Don't let these guys play you. Buying these mortgage bonds may put downward pressure on the rates, but a better fix is to increase housing supply. See post-retirement travel? See this right here? This is exactly what they're going for. See, this is what happened when they did this $200 billion first. They're going to do $1 trillion, just like they did in 2020. What happened in 2020? Remember how housing prices all of a sudden shot up 20% in a year, 40% in 2 years? This is the reason why. See, manipulation once again to grow your wealth. This is also why traditionally I was saying, well, you should sell the house, take that 40%. Pocket it. Why? Because you knew because of the crash back then in 2021, your stock prices, I shouldn't even say this. Just go look at NVIDIA, AMD, Apple, Tesla. Just go look. You could have taken your $200,000-$300,000, put it into equities, collected on your 17% for PSEC, by the way, your 16.5% for your ORC all this time at 300%, went and got a rental and sat there and waited for your down payment for the next cycle, which is now 2026. So you could have been collecting all that money, loving it, have cash sitting, your duffel bag of cash sitting there. And you could have been like, bring it. And you could be going right now before the price increases and saying, you know what? I'll take this 5.99 that you have right now because you have already set up your war chest over the last 3-4 years because you have money that's giving you your 16, 15, 17, well, probably on average 15% annual return from a few $100,000 that you've been letting it sit, watching your appreciation of your stocks. Because even if you had a real estate investment trust, that increased in value, even if it's only $3 or $2 over that time, who cares? You're still getting 16, 15, 14 to 17, 18% annual return while you were sitting there and having that pay for the mortgage. I mean, pay for your rental. So you still have everything. Now you put yourself in another seat because now whoever buys right now, you might have to pay a little more. But next year, you're just going to go refi me at a lower rate. So that'll reduce your mortgage. You can do that or nothing at all. But keep in mind, there's a fine line because as soon as the rates hit like 4.75, then people start buying, and that makes the price go up. So to the point of post-retirement travel, he's exactly right. This is why this is this is why homes being built at a pace was always a thing. But the problem is people can't pay for homes anymore at the high interest rate. So that's why builders had to stop building. It's not profitable when they have nobody buying. Now they had supply. There's oversupply now where nobody's buying. And the quality of the homes, oof, sketchy. The quality of homes are not what they used to be. So that's another problem. People are moving into homes. All you have to do is Google. I mean, all over the place. It doesn't matter if you're in Cali, Nevada, Texas. People are moving in homes, new homes that have problems, brand new. And then, of course, the infamous, well, you have a 1-year warranty. And then the homeowner, their home builder says, yeah, well, send it to the office and then we'll have somebody come out and look at it. That's 2 months later. Meanwhile, people have water running through their floors and running through their walls, and the cracking of their foundations and moving. I mean, this is outrageous. So once again, if you're going to buy something, you want a luxury upscale builder with track records and in an upscale luxury neighborhood, not an upscale luxury residential. You need HOA because it has to be approved by the HOA departments and all of that. So they have another layer of builder quality because they come out and check too. So again, keep that in mind. So you pay a little extra, 50 to 100 G's extra, whatever. It's worth it. All right. Just saying. Now let's get back to something else. Land, ladies and gentlemen, land. This is the time before land starts going up. If you're into land, you should be considering getting something that has water, sewer, garbage, water, sewer, electricity to your land. Do not buy land unless you have a reason. If it does not have all three of those, you better have a plan. Otherwise, you want to make sure you buy land that has water, sewer, and electricity hooked up already. It costs hundreds of thousands of dollars just to go like a quarter of a mile down the street to bring electricity down. Just electricity. Sewer, if you are a quarter of a mile away, probably going to cost you 60, 75 G's. And you would have to pay for it. And that's when you have to go to your neighbors going, hey, dudes, you guys want to help me pay this? They say, hell no, man. But thank you for that gift that you're about to do. All right. All right. You're absolutely right. That's how you do it, man. It's serious, says RTRTR. Welcome to the SSN Nation Financial Friday night live stream. It's story night. All right, Brian P's in the house. Mr. Dividend is here, enjoying his 50, 60% dividends, even more, because he invested in Yield Max ETFs 2.5 years ago. And I don't know his status right now, but all I know is he has so many shares every week of payouts. It's incredible. So he's doing awesome, and you have to give him credit for that. I'm glad to see you once again. And no, I have not pulled up my emails today. All right. Because of that, not sleeping for like 2 days, I crashed. Don't forget about the Bancus. Oh, yes, I did forget about putting the Bancus link in the chat room, didn't I not? The crypto Visa debit card. Thursday at 2 p.m. Eastern. And that's when they have a Zoom call. You're invited. Just remember, go check it out because you can make money by referring people. And when the person uploads money to their card, you get a little percentage. Quite frankly, it's kind of high. It's 4%. That's kind of high. And that's because they give a percentage point to whoever referred you. But it's still high. Even 3% is high, but 3% has to be a norm, right? It's kind of high for protection. I feel like it's protection. Other people may not, but I feel I don't like the government tracking. I don't like them knowing every move you make. I don't like when I get pulled over by the cops and the cops can read everything, where you live, how much you have in bank accounts, if they want to F with you. Because needless to say, if they know you have money and assets, they're going to go like, well, this dude can get a lawyer, so let's just give dude his ticket. The other way they do it is, well, we know dude can't get a lawyer, so let's F with them. Okay? This is how it works. All right? Just so you guys understand. Story night. So I'm cruising down Highway 50 in Sacramento. I'm going like, oh, I don't even know. It's a rare moment. It's a clear day. I'm cruising and it's blue skies going up in the little foothill mountains that I live. And I'm sitting there like, yeah, it's a good day. And there's nobody in front of me. I just like, man, I never usually go over 80. 85, 90. Man, let's roll. So I'm rolling 85 to 90 range. Don't see nobody. All of a sudden, woo, lights. I'm like, of course. I don't know where dude came from. So now pulls me over. Let me see your ID and insurance. My ID has my address on there, but my address is not where I live, right? I live up in the foothills, they say. So he comes back to me and he says, of course, the usual. Where are you going? What? I don't think that matters. I know I was going like 80. Obviously, I had to say below 85, 90, right? I know I was going at least 80. He's like, yeah. I said, so you going to give me a ticket or what? He's like, yeah, I just came to find out because your driver's license says you live on the other side of town. I'm trying to figure out why you're over here. Well, remember, when you live in upscale luxury locations, that starts eliminating minorities generally. They're like, I know this dude don't live up here. I know he don't live around here somewhere. These houses are 900 G's, 800 G's, a million G's plus. He no, he don't live over here. So now he goes back. He looks up whatever. He comes back and he says, okay, man, look, where'd you say you live at? So now I said, look, man, look, I live up here at Serrano. He's like, what? I said, I'm only going to do this one time. Since you've been kind of funny, because I already know what you're doing, I said, here, man, here's one of my bills from my house. Look, doesn't that say Tuscany Way? He's like, damn. Okay, sir. Have a nice day. I was like, it pays to live up here, don't it? He starts laughing. No ticket, no nothing. Have a nice day. Slow down. That's how it works, ladies and gentlemen. All right. There's the Bancus card. I put it down in there. Yeah, they take too long. Exactly. Exactly. Hey, Eric, did you see the news? No, I did not see the news. World War III. Why is it the most? Yeah, there won't be a World War III. You want to know why there won't be? I'll just put it plain and simple. China, Russia, United States. If China and Russia just says what the United States says when China and Russia does stuff, oh, don't do that. Don't hurt people. We'll come and when we might help out against you if you don't do it. Stop, please. They all do the same shit. They all sit there and talk shit. There won't be no World War III. You know why? There's no money in it. They all lose. They all lose. They're not going to do it. All right. There's really only like 3 companies or countries that's going to do anything. Everybody else is just going to stand by and watch. They don't want to enter the fray. They don't have the GDP or the money to enter the fray. So that's why the United States, China, and Russia does what they do. They intimidate, invade, do whatever because they know the rest of the world is just always going to be timid. Right? Just like what happened with Ukraine. Russia invades Ukraine, just like Germany invaded countries. All the allies and everybody just looks and says, oh, yeah, well, we can't give them equipment to fight against Russia because if we give them top tier equipment, then that would be like we're fighting and they're fighting on our behalf. I'm like, what are you talking about right now? Who cares? Seriously. Your ally just got invaded and you guys are sitting here talking? What's there to talk about? The fact you're talking is a sign of weakness, by the way. And so Vladimir knows this. He's like, are you guys joking with me right now? You're going to talk? And then he goes, nukes. And I'm like, yeah, everybody has nukes. That doesn't mean anything. But that should tell you the state of this. Just like when China's running around all over the world, like China right now is circling around Taiwan. I don't know about you guys, but I know for a fact when China eventually takes over Taiwan and has 85% of the chip market under their control, I think that's going to be a very bad situation for the United States and a lot of other countries. So again, what's going to happen when that occurs? You guys know what's going to happen. Nothing. Let's stop with this. America is the savior. They're not. They never were. They're invaders. Again, I had to point this out to my friends. Just look up Google 1920s countries the United States invaded. Honduras. Just saying. Guatemala. Haiti. Just in the 1920s to steal gold, natural resources, terrorism on a global scale, just like British Empire in India, China, Hong Kong. Same thing. These guys ain't going to do nothing, but they're going to make sure taxpayers are going to pay for billion-dollar planes to siphon off your money, but they ain't siphoning off the rich guy's money. Just remember that. They're siphoning off your money. Rich guys get special treatments. They get tax cut, tax breaks. You don't. All right? So stop playing out here, ladies and gentlemen. Protect yourself. Build your wealth now off the backs of them, because once the rug pull occurs, meaning they pull the ladder up because you're not in their category, right? So as long as the stock market rises, you need to rise. You need to be in it to rise with them. Soon as the stock market starts staying level or comes down a little bit, you don't have any advantage. The guys that have the million shares of stock have the advantage because they can borrow against it, for one, and still keep it and get preferential treatment with loans at 1%, 2% for 15 years or 0%. Just think, see, that's a different category. That's why I need you guys to make sure your debt is in order, your debt. Make sure you guys get your debt reduced. Like the big boys, do debt consolidation, debt reduction with our girl Tracy, TRACY.sharpe, SHARPE at moneyladder.com. Send her an email. Let her know. Familia told me to come over here. Eric told me. Family. Okay? She's family. And not by SSN Nation standards, literally. Okay? She's going to help you by SSN Nation standards. She does this to help people. All right? She don't need to do it. She's just doing it to help people. And I'm putting in the chat room the link for the video. Okay? Yeah, man. It's insomnia, man. That's exactly what it was. 2 nights in a row. Bzz, bzz, and it's through the walls. And I'm like, this can't be happening. Front desk, what's up? Sorry, sir. Somebody is in that room. We're full. I'm like, no, this can't be happening. Not 3 in the morning, 2 in the morning. Come on. Crazy. BitPay is the OG crypto card since 2017, says Gary Wolf. Gary Wolf, I'm very happy you said something about BitPay. By the way, hold on. I have to go see BitPay. U zone. Okay. As soon as I go look at something. In order for BitPay to operate in the United States, Does anybody understand what they have to do? Don't they have to sign up with the United States? Actually, somebody right now uses BitPay, right? Just like crypto central exchanges have to be regulated by the United States government, I'm pretty sure BitPay signed up. I'm pretty sure. Because that's the only way you're going to be able to get United States. Yeah, there we go. NID. BitPay is licensed to engage in virtual currency business activity by the New York State Department of Financial Services. I knew they were going to be regulated. I knew they were going to be regulated. So every time you send your money through these guys and to these guys and use your card, it is trackable. I'm sorry. Again, ladies and gentlemen, this is not your grandma's United States. They have infringed upon your rights financially. Regulation does not mean nothing. Wasn't the banking industry and the mortgage industry regulated in the 2007, 8, 9 Great Recession? Weren't they? That didn't stop them from stealing people's money from the bank. Didn't stop them from stealing people's brokerage accounts money. I'm sorry. The savings and loans that crashed in 89, 90, they were regulated. It didn't stop them from crashing, did it? The only reason they do regulation is to make sure you feel comfortable. I'm not saying everybody's this is going to happen to you, but when it does happen to you, you're going to have a different outlook. All right? That's why I can't F with BitPay. They're regulated by the United States government. I don't want them to know where I'm sending crypto. Crypto is supposed to be anonymous except for the transaction numbers. It's that simple. What are we dealing with right now? We're dealing with these guys need to know where the money's moving to because money laundering, drug dealers, all that. Because there was never an Iran Contra affair where the United States government was swapping drugs for guns and weapons, right? Iran Contra, drugs, weapons, United States, Oliver North, Reagan, all them guys, didn't go to jail either. I'm just saying. Come on. You guys better figure out where you live. Buying versus renting. At this point, is there really a difference? Here, what's very funny? I've never felt any certain way because the only way I look at having a mortgage is because I want that to increase in value rapidly. The only reason I do renting is because I don't need to have a mortgage. That's the there's two sides. Some people, like Buffett would say, renting gives you flexibility because you're not tied in. Whereas a mortgage, you got 15 and 30 years, and soon to be, well, there's going to be 40-year ones too. There's 40-year ones that popped up as well. But that's what you're locked, and you will lose your job over the next 25, 30 years because there is no job guaranteed, not even a federal government job. The only job guaranteed is you better become a congressperson or a House of Representatives person or a judge. Something of that nature, because everybody else, you could always be on the chopping block, no matter how much you make. So the odds of being able to do what our parents and grandparents and great grandparents who were able to have a job for 25 to 30 years and know they're going to have their pension and know that they're going to have health care and all that, those days are over. It's over. You can forget about that. So again, buying and renting goes for whoever wants to buy and rent. Ask yourself something. Over in Beverly Hills, Southern California, New York City, they have expensive homes and people rent them. 20,000, 15,000 a month. Some people would say, oh man, you're paying somebody else's mortgage. Well, the other person says, well, see, I'm only going to be here for 1 or 2 years. So I want to live in this cool place. I'll pay the 15,000 a month. I make the money. I don't want to be tied down later. If I sell it, yeah, I could make more money, but that doesn't interest me because I have money. So they say the flexibility of them saying, well, I don't really like this neighborhood no more. I think I'll move over here or whatever. Flexibility is a thing too. A home is a liability. The only time it turns into a positive situation is if the price value increases. The price value increases, everybody's price value increased. So that means when you sell your house, where are you going to live? And what normally happened, people go, oh, I'm going to move to Texas. I'm going to move to Florida. I'm going to move to Georgia. I'm going to move to Alabama. I'm going to move to Tennessee. And I'm going to move to Colorado. I'm going to move to Idaho. I'm going to move to Washington State. Every time that has occurred, that increased home prices in that city and state. So they previously had low prices, but now because everybody's moving there, the prices went up. And now the home prices are just like 10 to 20% less than the place they came from. Now they get to win because they bought like now, and then the price increased up because more people were buying. But again, you don't have 50 million people winning. That's the problem. Because as prices go up, people buy at a higher price. Not everybody gets to buy at today's price. They're buying at next year's price. The price has already moved 50, 100, 200,000 G's, right? So keep that in mind. So that's why people do renting versus buying. So they still have flexibility, and they also bypass the repairs. Repairs are not cheap. In case people have not had to repair their home lately, everything, ACs, roofs, everything, plumbing, everything is thousands, it seems. It's no joke. And when you have 70% of the population doesn't even have 1,000, 80% of your population is living paycheck to paycheck during the month. Nobody has an extra 5Gs, 10G, not nobody. I always say nobody, but a large percentage of the population in America does not have 5Gs, 10Gs, 20Gs to deal with my AC unit went out. Because that's 5 to 10 Gs right there. Depends. And if you get a 5G or 4G one, that's going to be a less quality. Just saying. That's how it works. That's how it works. You want something that's going to last. But the one that's going to last, well, you might have to pay 10 G's, 12 G's. Just saying. All right. This is what we're dealing with out here right now. All right. I don't want this for you guys. Debt takeover. I like that. So I put in the chat room. I hope I put in Tracy.sharpe. You guys got her info, right? I put that in the chat room. You want your debt consolidation resolution. You don't have to file bankruptcy. Debt collections, that you don't need to deal with that. What you do need is they negotiate. And I put a link to when she came on and worked for another company, but now she works for Money Ladder. So make sure you hit her up and let her know you're from SSN Nation. Eric sent you. All right. Tell her family told me to come and talk to you. Doesn't cost anything. Email her. She loves helping people. All right. She's wealthy on her own. Don't worry about it. That's why she's helping. All right. Okay. She's sharp. All right. And no pun intended, because that's her last name with the knee at the end. But the point is, she's a superstar. All right. Runs in the fam. Just saying. All right. Let's go. All right. Judah Bake. There it is. Oh, he found Judah Barack. Welcome to the SSN Nation Financial Friday Night Live Stream. Thank you so much for being in the house. Greatly appreciated. There it is. That's it. Tamara Larry, another investor, is here. Thank you so much for being in the house, and welcome to the SSN Nation Financial Friday Night Live Stream. And once again, everybody smash that like button if you have not already, because the YouTube gods, they don't like giving you this info. They want me to sell a course. They want me to tell you to do stuff that's not conducive to making money. They want me to talk to you about liabilities, not get your debt reduced, not trying to build up your credit to make sure you can have 0% interest rates at 36 months. You heard me. It's going to be coming, ladies and gentlemen. I predict about 7 months from now. We'll see how close I am going to be to this. I know I don't think it's going to be the first half of this year, because they're not going to reduce the Federal Reserve rate down to a low enough level. But I think by the time July, August comes, it'll be at a low enough level. They'll manipulate some other things, and I believe that's when we'll have 0%. But I need you guys to have a 775 credit score. That's why I need you to get your debt in order by the end of this year. Some people had a 3-year head start, just saying. All right. Now, let's go. Hello, all. Once again, tomorrow, Larry. Tell the young men, Happy New Year. All right. Hopefully, they're continuing to be superstars. All right. Gary Wolf says, tiny home community now out here. There you go. Tiny homes. See, we're going backwards. We're going backwards. Tiny homes are costing $100,000, $150,000, $200,000, which is crazy, but that's true. And people are accepting tiny homes, which makes perfectly good sense. And I'm going to tell you why. Because now you have a smaller footprint. All your bills, your electric bills, if you had gas, all of that is reduced dramatically because your square footage is reduced dramatically. So it doesn't take that much to heat up and cool. So therefore, or heat up the old-fashioned way by chopping wood. You have options. This is why when the migration to the West and they was going to the West, they built homes and they were all small little homes. If somebody had a 1,000 square foot home, that was rare. Heating, hardly no plumbing, and all this stuff. They were like, we need a place to sleep. We need a place to fix our food. Things were smaller. There's a reason the nation was poorer. And guess what? We're going back to the nation is getting poorer. And that's why now tiny homes, like Gary Wool is saying, it makes perfectly good sense, doesn't it? We're going backwards. All right. While the rich guys are siphoning all of the money out of the system into their pockets and they're holding it, whether it's by assets, liabilities, they got it. They're scarfing it. And taxpayers from all countries are giving their money to the government. And the government says, hey, my friends, you rich guys, since you contribute to me and my friends, we're going to make sure you get paid back. That's how it works. We're like a third world country. This is not any different. So that's why you guys, this is going to be the year of, it's pretty much over as far as getting your wealth. If you don't have it by the end of the year or have things in place, then you will have, I give a runway all the time. You will have like another 6 months to 8 months. It's fine. But the point is, if you can get started already and in place and start building, then it'll be a lot easier. Even if you have not already started, now you need to start. Okay. You're still going to have a runway because nothing will change. It's already in stone. It's already coming. Nobody's stopping it. No matter who is president, who is a senator, nobody's stopping this. They all want the business guys to win, the wealthy to win. And in order to be wealthy, you have to invest in wealth items. All right. 1 hour, 32 minutes. Once again. All right. Let's go. Let's see what else we got going on, ladies and gentlemen, because there is more. There is more. Looky here. I love it. Happy New Year. Obsidian Lion, the code keepers in the house. Welcome to the SSN Nation Financial Friday Night Live Stream. Another investor, businessman's in the house. Very happy to see you. Thank you for that support right there. You cooking. Thank you so much, man. Thank you so much. That's what we're trying to do here. We try to help everybody. EV Place is out here doing the damn thing, making investments outside the US, making investments inside the US stock markets, and getting those dividends. I love it. I love it. I love it. And welcome to the SSN Nation Financial Friday Night Live Stream. Another member of the channel has arrived. I humbly appreciate it. The support. And once again, the tagline, good evening. I'm sorry for being late, but I'm setting up second side business. Oh my, see what I'm saying? Superstars are here. Once again, ladies and gentlemen, a second side business. But let's talk about that renewable energy speaker system. That's right. You guys want 700 watts of crispy, clear wattage coming through to your speaker system in your vehicle with renewable energy source. This is the man. I'm going to put in his eBay so you guys can go check it out, putting in those battery packs. And it's renewable energy because as you travel, you're renewing your battery, renewable energy in the back. So once again, I'm putting it here. Go show some love. If you love your speaker systems, you might want to talk to this guy. All right. Because he can scale the power up as well. Just thinking. And the 700-watt pack, you can run without using your car battery for up to 2 hours. That's right. I know you got, I know some of these guys watching. I know you guys out there watching. Come on now. We know what you guys are doing. We know you go to those car shows. You know you don't really want to hear when they go, oh, I want electrical to my place, to my spot. And you're like, yeah, well, see, that's going to cost you $250 a day. You're like, what? Have you lost your mind right now? No worries. I saw on our channel, SSN Nation, we got EV Place to come down and hook us up. And we don't need that. We got 4 to 6 hours worth of battery pack power. Well worth it, because I'm not paying no $250 a day. I had all of that hooked up for $750, less than that. So I'm sorry. I don't need it. I was just asking for a friend. Oh man. This time, for my wife, 3D printed clay jewelry. Interesting. Now see this, man, a 3D printer. I love it. Great move. Great move, smart thinking, gives other people ideas. I love it. I love it. I love it. I love it. All right, ladies and gentlemen, manipulation is the key. You have to understand the signs. I wanted to talk about the mortgage, but again, they're manipulating everything. All right? It's very simple. We don't really care about the manipulation when it's regard to wealth. It does cause something else, though, that causes more people to not be able to gain the wealth. But nonetheless, it creates a shelf. A lot of people are going to be falling off. All right. But there's going to be more people going to be able to rise. And now you have this situation that if you don't rise, you better figure out something, because otherwise you're going to have a hard time catching up. All right. So make your investments. It's very simple. Stock markets, even real estate now is back on the table. And I started talking about land. Oh man, it used to make it so easy. I have too much things in my brain. Um, Raw land, 0% in, not 0%. People do monthly payments. Just so you know, I haven't been able to pull up Brian P. My email. It's out of order, apparently. I don't know what the deal is. I've been sitting here waiting for it. It wouldn't come up. But trying to think. I can't. It's a great land. I think land is 1% interest, acres and lots and things. So again, check it out. Is it great land? I can't remember. Is one of them. What was the other one? I can't remember. Land. No, it's not great land. Man, hold on. I'll just have to Google it. I'm thinking in my head I got like 3 different names, and I can't remember the name of one. Okay. Don't care about that. Don't care about that. I just Google landwatch.com. There goes one. I just Googled it, but those are the names. Movoto, Movoto. That's another one. Again, people will do small down payment and monthly payments, because remember, land by itself is pretty much worthless. You're paying while you're sitting there, and it's appreciating. You have to pay the small taxes. And generally, you buy a parcel or 2 acreage, whatever, and the builder comes and knocks on the door and says, hey, I'm in an up and growing area. I want to buy this from you for X amount, but you might have been holding it for 5 years or 10 years. So I always suggest, if you buy land, you better have a plan for it now or later, but you have to have whatever your plan is. You need to have one. You shouldn't just buy land just to say, oh, it's good to hold on to it. Holding on to it means nothing. You must know that you went down to the county records and you saw that they're going to be building a mall way out here in the next, whatever, 5 years, let's say. Next 3 years would be better. But you need to know. Don't just buy something in the middle of nowhere. All right. Because the value is decreased because nothing is coming. Nobody cares. And you just don't want to be able holding it and then, paying the little small tax amount. And then 5 years later, it's still worth that plus whatever you bought it for, plus a couple G's. You don't want that. So hopefully Movoto is Movoto. I used to say something about that one. Landwatch.com. I can't believe, what's that one? It was Land. I thought it was Great Land. I can't remember the name of it now. That one was pretty good too. But anyhow, let me go check this out again. Okay, I'll just do it because I thought it was Great Land. But landandfarm.com. No, that's not it. That's not it. Maybe they're not around anymore. That's crazy. Yeah, I can't find them. All right. So hopefully that helps you out. All right. So again, Obsidian Lion, the code keeper, done did it. He made a donation, and man, I humbly appreciate the donations. Greatly appreciate it. Thank you so much, man. You always cook though. But is the urgency to build assets that vital? I've been trying my best to buy my 24 hours back. What do you say to the young people still plugged into the matrix about wealth? That's what I've been trying to say over the last years. Number one, we already know the numbers. 80% out there are living paycheck to paycheck. That means whatever age you are does not discriminate. So the first thing you need to do is reduce your debt. How do you reduce your debt? That is the key. It's very hard because most people pay the minimum on their credit cards because most people have credit cards. That's the only thing that allows you to go down, sign something, and they say, well, here's $5,000 line of credit card. Here's a $10,000 credit card. Then they say, oh, you can swipe up to 5 Gs, and then you can just send me like $125 a month or whatever, $150 a month. And most people do that. They just keep swiping because they go, oh, yeah, I can pay the 100, 125, 150 a month. But they never pay it off and don't realize they'll never catch up because it's not just a simple 5%, 3%. It's 30%, 25%, 35%. So you can never pay it off. So then they get caught up and then you miss a payment, credits gets messed up and all that. But the fact of the matter is you need your debt reduced. So this is why I gave out the Tracy.sharpe. I'll give it again. Tracy, TRACY .sharpe, SHARPE at moneyladder.com. And I'll put it in the chat room once again because what I'm putting in the chat room, we did a video with her 2 years ago when she worked with another company and she works with Money Ladder now. But it works along the same lines. It's more updated now, maybe more streamlined with Money Ladder, but at least if you watch the video, you'll understand how this works. And you don't have to file bankruptcy. You don't have to make your credit bad. All you do is get the debt, who you owe debt to, you renegotiate or they renegotiate on your behalf. Same thing that the rich guys do. They have 0% interest rates. And soon as they, and 15-year loans, soon as they get up to around 11, 12 years, they go back to the government and say, hey, man, can I get an extension of 10 years? And all they do is say, well, you're going to give us a point or two. And yeah, we'll extend it another 10 years. Because interest is all they really care about. They don't want the asset. They really want the interest. They don't even care about the principal because it's not relevant. When somebody comes in and says, hey, I want a $25 million loan, and they go, oh, yeah, we'll give it to you for 2.5% interest. All they care is 2.5% interest. That's it. They don't really care because that's what they do. They have hundreds of billions of dollars getting 2.5 to 3.5%. And of course, if the person defaults, right, they get it back, but the property value has increased most of the time. So they win anyhow. But they're not in the collection of real estate business. They just want these people to just give them the interest so they don't have to do nothing. And of course, there's sometimes people default, so they'll do something. But other than that, they're just like, they don't care about that. They want the interest. All right. This is why you have investors, by the way. This is why people invest. Like you can say, I want to build something, right? But I need an investor, like a home or apartment complex, whatever. This is one of the reasons these guys have so much money that they're just like, well, we can take a chance on this guy. We'll give him a whatever, give us your 20% down and we'll do 2.5% interest only, mind you, interest only for 2 years. These are real deals. Interest only for 2 years. At the end of 2 years, you have an option to do interest only for a third year, or you can just pay us what you owe us on the second year. But you have an option on the third year. All this type of stuff that people don't even usually think about. So imagine you buying an apartment complex, $5 million. Somebody says, "Oh, we're going to give you a loan for the rehab portion. That's going to increase the value. You're going to buy it at 5 million." You say, "Yeah, I'm going to increase the value. We're going to do rehab. It'll be worth 7 because we're going to increase the mortgage. I mean, not the mortgage, but the rental fees about 10%. So that automatically means that it's 5.5, and then we're going to do rehab and refurbish and add this, add that, and the next thing you know, it's worth 6." They go, "Yeah, just send us the 2.5% for 2 years. And at the end of 2 years, you have a third year option at 2.5% interest only. So in reality, you pay us 5 million at the end of 3 years if you want." Simple. But all that time they got interest. Interest means, since I didn't pay principal, that means my interest is lower. So now I have profit, and I get to use that profit to do the rehab to increase the value. Not hamstrung having to pay the principal portion plus the interest. Guys getting it? So that's why they don't really care. They're just sitting there going, well, we can always repossess the thing. I mean, they're like, we don't really care about that. We don't really care. Just give us the interest. So those are the differences that would happen versus mom and pop. You go buy a house, you go buy a duplex from somebody, the odds of you getting interest only is slim, right? That's not going to happen. All right. Hopefully you guys understand what I'm trying to say. Keep it good. Keep Castle Rock REO in mind if you're looking for foreclosure EV Place. Thank you so much for bringing this up, because that is a great reference for everybody. You should go look at this. Write this down. We were looking at this. Man, let me go pull it up right now. I think, they had great deals before. Castle Rock. What was that? Castle Rock REOs. Let me see if I can get them. There was some awesome, Castle Rock REO is the one, right? Yep. Isn't that the one? I'm pretty sure that was it. Thank you for bringing this up, because this right here is going to come into play right now. I want somebody right now, if you're looking for an investment property or affordable fixer-upper, somebody give me a zip code. All right? I'm going to put this on the screen just so everybody understands. This is going on the screen. All right? Let me go see. Here we go. Share this tab instead. This is going on screen, ladies and gentlemen. You guys know how I love real estate. I love real estate. This right here, somebody give me a zip code. Dominican Republic Tourism Agency said Michi's is one of the 3 upcoming areas to explode the tourism. Michi's is the next Punta Cana. Time to check on a beachfront lot. It's getting a lot of attention. Post-retirement travel. I was doing this in 2024. But remember, I was on a whole different program, commercial. It was $55 per square meter at the time. Now they are probably at 200, 250 per square meter. That's what I missed out on in 2 years because my old friends, by the way, notice I used the word old friends, did not come through with the financing like they used to. So I said, fine, fine. All right. But that's what would have happened. And I had two beachfront properties, one in Yavera Alto and one at Michi's. Both was because the one in Yavera Alto, the reason why it was cheaper because it only had 100 meters of beachfront, which is slim, really. 100 meters is slim, even though a 100-yard field is wide. But when you start building up, put a pool that's for kind of a resort, you're taking up 25 meters. Then you got to have an easement. So really, you kind of how much space can you put within about a 75-yard area after you put a pool in that's 30 feet long, right? Now you only have 45 feet left. And if you put a clubhouse, now you got what, 20 feet left potentially from that beachfront. So now you have to start making choices. What are you going to put up at the beachfront? Turn the pool sideways, maybe. All these things come into play. But the fact of the matter is that was on sale in 2024. It would have been awesome to put that together because Mishi's was the 12,000 square meters with an L shape. That one also only had 100 feet, roughly, of ocean front. So on that one, I was going to make a shopping center because Yavera Alto doesn't have shops on their beaches. They're all inclusives. So I was going to, Michi's, sorry, and Michi's, they don't have anything there. So I was going to put two, turn them sideways, 3,000 square foot buildings at the front, and then have a community of villas in the back. Not community, it was only like 6. And they were going to be upscale luxury, second level, you can see the water kind of thing. It was going to be sweet. It was a whole package. And the package, I can't remember how much it is. One of these days I might show you guys because now it didn't come to fruition, but I'll show you what the PDF and what they were receiving. And you guys would lose your mind because you would be sitting there going, are you serious right now? Yeah, it was crazy, real crazy. But nonetheless, Castle Rock, there you go. Anybody, give me a zip code. Let me see. Reduce your unnecessary expenses. Instead of Starbucks, make your coffee at home and get some assets that pay you. That's exactly right. That used to be post-retirement travel. A little bit, instead of Starbucks, a little cup of coffee, invest that. Instead of the coffee, invest it in the stock market. Exactly. I love it. Obsidian, I follow you. Okay, so back to the point at hand. The youngsters, here's what you have to do. Number one, expenses. You got to reduce it no matter what. Now, here's the one thing that's been happening because of what Obsidian Lion, the code keeper, has been saying. He's been saying that they're having problems. You know what they're doing? They're moving back with parents to save money, which is an option if it's available to you, because that's where this goes. There is no way people who are like, let's say 25 years old, 30 years old, there's no way you're going to be able to spend 35, 45, 3,500 per month by yourself generally. You have to make 9 G's a month. You have to make 108,000. How many people 20 to 30 is going to be making 120,000? Seriously, that's what we're dealing with right now. This is not 1960, 1970, 1980. No, this is 1990. This is over. So they're in a box. And here's the kicker. They're in a box, but their parents or parents' parents are older. They have assets, but those assets may not be distributed down to benefit the family because who knows what reasons. So now you're on your own and you can't afford even rent. It puts, there's 30% of our population in danger. And people don't even know it. Obsidian Lion, the code keeper, knows it because he brought it up. There's not much we can tell them. They have to figure out, I need extra streams, right? They need, that's why they love the TikToking and the social media, because they can make money from that pretty fantastically. But not everybody can do that. It's a big social media platforms out here, and not everybody can win. All right, I'm proof. All right, I've been doing this for 5-6 years, and I have hardly any videos over 1,000 views, hardly any over 500 views. Let's just get real. And that's been the whole time. I probably have 20 videos that have over 500 views or more out of at least 1,300 videos. All right, just so you guys, shorts don't count. Shorts, I do have a few that, whatever reason, have 1,000 views or more. But normal videos, live or otherwise, hardly any over. I probably have 1,000 videos that have less than 500 views, and I probably have 50 videos that have over 1,000 views. All right, just to give you guys an idea. So not everybody's equal. All right, even though we help people and do all that, but the problem is they have to do the unthinkable. Just like when you didn't have to sleep, right? They have to work 2 jobs. They have to make See, before you didn't have to make investments. All you had to do was just go, yeah, well, I make money, I save it. You got 3, 4, 5% interest rates, whatever, in the bank. I made investments in stocks. You didn't have to be diligent. You know, you could work your way. You get a raise after you work somewhere a year or 2 or 3, whatever. And so you would be able to creep along. And then eventually you say, well, I think I'm going to buy something in your late 20s, early 30s or whatever, and start. Now it's very hard, because how many people are going to be 30 years old making $120,000 a year? So now they have to be go-getters. You can't just be like, I'm just going to work at a job and I think that's good. That's not going to work. Prices increase too much now, too fast, because of our dollar values. It's devaluing our currency. In fact, 9.3% the dollar value decreased last year. So the hidden tax was 9.3%. So it's not your imagination. Whatever you spend $1,000 on now costs $1,093, because you lost value of the currency. But what's the problem? A 4 to 10% increase of inflation means the $1,100 is now costing you $1,200 because of the 9.3% loss in currency value. But you don't realize it. You're paying an extra $200 for the same thing for every 1,000, right? So that's where the problem comes in. They can't catch up because nobody's getting a raise at 10%. You're lucky if you even get a 2 or 3 or 1% increase in wages. And that's why they can't catch up. All right. So what else do they have to do? After you have to reduce your debt, then you have to make investments that pay you, as was discussed already. So that means when I said dividend investing, that's why you have to study dividends. Now, again, I'm partial when real estate investment trusts, when we're in this cycle. I told you guys last week, I said, or 2 weeks ago, I said, you guys should be doing real estate investment trusts. They are going to do this. This is the only thing that can move the economy. See, this is what people don't understand. Let me explain something once again. In the early 2000s, okay, that's when I bought a house. All right. One of the homes I bought was in the early 2000s. Why? Because we have the same cycle now. So you get to reap the rewards of buying a little early, having your mortgage a little higher. And then when they keep reducing the rates, all of a sudden people catch up. But when people catch up a year or 2 later, your humble house all of a sudden goes up $200,000 in like 2 or 3 years, because other people start catching up as they reduce the interest rate every 3 months to 6 months. So you were ahead of the curve, just like right now, you could be ahead of the curve. That gives you a huge advantage. But what my point is, because people had huge advantages, you know what they were doing with their $2,000 or $200, $300, $400,000 of equity? They were getting home equity lines of credit. Next thing you know, my neighbors, I'm hearing vroom, 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 vroom. Like, okay, one bike, that sounds like two bikes, motorcycles. And I see like brand new motorcycles from Harley Davidson. And I'm like, aren't them things like 30, 40 G's each? They're like, yeah, man. Yeah. It cost us like they gave me a deal, 75 G's. I'm like, what the, why? Oh, they're cool, man. And I got a home equity line of credit. So that's what I used to buy it. I'm like, serious? Yeah. So now they've locked in. Not only do they have their mortgage, now they also have another second mortgage, so to speak. The value of their house, they've decreased, but they still have a equity in it. But that's what they used to buy these motorcycles. I can forward that to other friend who says, I just went down and bought a $200,000 Sea Ray, right? From their home equity lines of credit. I'm like, what are you doing? That's stupid. But they got to be with the Joneses because everybody's doing it, right? So, what the point is, the youngsters, you have an opportunity, but you can't do what these dummies did. And I shouldn't say dummies because they were smart. It's just that whenever money's involved, when somebody says they have $300,000 equity and then somebody talks them into, well, give us $50,000 down, or it's only 75 grand, and you have 300 grand, you act stupid. And when the mortgage rate is like, what was it, like 2% or 2.25, something small. It seemed like it was no big deal to add a couple $100 to your mortgage, right? That's what it seemed like. But the fact of the matter is, it comes back to bite you. All right, let's go. You don't do any marketing, social media. People want to see how you live to believe you. Richard Fain leverages cars to grow and stole content. Hey, you know what's funny? Richard Fain, he's in Fort Myers, and I never seen him. Never. I was there for like 3 years. I figured one day I'd be driving down the road because let's get real. There's how many, I mean, Florida on the other coast, they got tons of special cars. Florida on the southwest coast, because of Naples, they have awesome cars too. And so he had cars, but I never saw him in any grocery store. And believe me, I'm all over the place. Why? Because I was in the restaurant business. So I was in shopping centers. I'm all over. And never ran into him. I thought one of these days I would have ran into him, but I never did. But yeah, Richard Fain, I saw him 5 years ago too. And he had cars. So he basically was talking about his cars. And then he found that what the awesome niche, the financials, and he does investments. And he was talking about investing, and he blossomed from there because all of a sudden he went on steroids. He just started doing like 2 or 3 videos a day. He started doing live streams a day. I mean, he's still doing it off the charts. So he has a huge following now. Me, on the other hand, I'm just showing people, yeah, I do restaurant equipment. Here's my restaurant office. Here's my stuff. I'm like, hey, man, who wants to come to the Super Bowl with me? You guys, I got you for the Super Bowl. What was it? Is it what we at now? I got you. I can't remember what Super Bowl it was, but nonetheless, I got you for the parties and stuff. You guys can come on down. No, anybody wants to meet me, come down. I got the tickets. So then I would show people, showing you at the Super Bowl parties, front row and all this stuff. Nah, nobody likes that. So I was doing something different. I wasn't like, I'm not really one of them show tells. When I first came out, one of my first videos, I was walking through my house and I was just talking. Then, I was just talking, telling people invest, do this, that, same similar things now, how to save money, what to do. Then I would, one of my favorites is when I used to go outside and I'd be like, look, guys, see all these expensive homes and look around. How many cars in the driveway? None. How many people do you see walking around? None. Go back to the park because the park's behind my house, open field. Go out there. How many people's out here? None. I said, funny thing, all these so-called rich dudes with $1 million pads, they're not at home. They're not hanging out like you thought. They're working their asses off. So again, I understand what you're saying, but I was never one to do any crazy. I showed cars, but I don't see any need for expensive cars. That's never been my thing. I just have my Dodge Challenger, BMW M series, had probably another car or something, because I always had like 3 cars. I probably didn't show another car I had. So, but I'm not really never trying to do all that. We're doing what we talk about. All right. And that's why I do this. Yep. He used to take a lot of content from, yeah, I know. Minority mindset once he switched to financial stuff. Yeah, I know, MDA. I didn't want to go there. I know. I know where he's getting some of his ideas. Yeah, I know. I know exactly what you're talking about. Obsidian Lion, don't tell me you gave me. No, another. Come on, man. Thank you so much for the donation, man. I humbly appreciate it. We've had layoffs. I've been aggressively buying crypto, metals, anything I can get my hands on. Remember Obsidian Lion? We were talking about getting metals. Remember? Remember? Gold, silver. Did we not say get a little bit? Like you did a great job, man, because a year and a half, 2 years ago, if you were buying it then these things are 2x and 3x for the metals. Crypto is, well, because it dropped down to 90, you're probably it was like 30 to 40 at that time. So you're doing 2x on that still. So yeah, you've been doing great. You've been doing real great. Metals, anything I get my hands on, my peers are just going through the motion. I realize my 401k isn't enough. It's terrifying. Yes, man. That's what I'm trying to tell you. It is terrifying because we're in an era that there's a separation, the have and have nots. The bottom, I said this every time, the bottom 0 to 50% of the population, net personal wealth is 13,000. Sorry. Yeah, 13,200 to 13,400. That's it. The bottom 50%. The 50% to 99, 50% to 90%, theirs is 300 and like 30,000 personal net wealth. Okay, people can survive. But remember, 175 million people can't. That's half of your country. And that's not the number. 8 out of 10 are living paycheck to paycheck during the course of a month. So now you can understand why, if you have 175 people messed up, which is already a thing, now you have, starting from that 50 to 55 to 60 people are still messed up, because even 300,000, where does that reach? It's probably around that 80% of that 50 to 90. The 50 to 90, which I don't know the number, 50 to 80, I'm sorry, 50% to 80%, I'd be willing to bet you is somewhere like 100,000. I'll be willing to bet you when you get to the 10, that 90% number, 80 to 90, that's where there's a gap. And that's why the top 10% is at 3 million. But 80 to 90%, I'd be willing to bet you, is probably something like a mil average or 800,000 average. And that's where the bulk of everything is happening, right? And then, of course, the people that are in that 50 to 80 range, okay, 300 G's. You can live pretty good, 300 G's. But again, that's your personal wealth. That doesn't mean that's how much you're making. So some people are probably, combo, their house value. Because remember, I used to have this scale. All right. He used to take a lot of content from Minority. Oh, yeah, I already saw that part. Yes, Obsidian, you're doing the right thing, man. Just keep doing it. Again, remember I was saying about your 401k. In fact, I haven't had anybody respond. Did you guys get your statements for your 401k? How much did you earn on your 401k from 2025? Does anybody know? Does anybody want to tell me? Because this is exactly the problem. If you're sending money to your corporation's 401k that they set up for you, then you're probably not beating inflation. You're probably getting 7, 8, 9% max. I would be shocked if it was 9. So that's one of the problems. Remember, they're siphoning off generally, oftentimes 1%. So when you don't think about it and all of a sudden you go, well, I've been doing my 401k for 5 years, they've siphoned 5% of your money off and probably a little more just on 1%. Never mind if it was 1.2 or something of that nature. All right. Let's go. I received over 40% in my 401k, but I manage it myself. Thank you, MDA0214. That's the only way you're going to get 40%. That's what I was getting at. That's the thing. A lot of the younger people, they do what all younger people do. You sign up and you go, yeah, well, take $300 a paycheck or $500 a paycheck and put it into 401k. Then they get like this single digit number at the end of the year going, hey, we did a great job, the corporation. We did a great job. Look, we did 8%. And you're like, well, that was me. Like I said, I'm like MDA0214. I was like, that's why people are like, Eric, why are you snickering? Why are you laughing? Why are you doing? I was like, dudes, it should have been double. What do you mean? Y'all are all happy like they did something. No, they kept some of your money is what they did and just said, oh, they'll be happy with 8%. I was like, this, I said, do it yourself. Self-manage. If people don't understand that, go to Fidelity. They have solo 401ks, self-managed 401ks. If you want to get really big time and you have a business, then have your business set up a business 401k where you as an employee can match or go into put money into that 401k. And then since you run your business, you go, well, I'm going to match at 3% after somebody's worked here for 2 years or something, just so you can be IRS correct, right? So then you have an expense from your business because you're matching your own monies that you're putting into your own 401k. And then you and your wife, because you're going to be employees of your company, have a tax write-off of up to $26,000 a year because you're going to be putting that money into your 401ks that your company's going to be matching. Just saying, okay? That's how you do it. One way you can do it. And go see your financial advisor or planner or whatever. Do your own research. All right. I'm trying to give you guys some, what do you call, direction for movement. So you understand you can do this. With the monies you have, you can redirect as long as you have disposable income. The key word, profit, disposable income, you have to have it. And if you don't have it, then you need to reduce your debt. And there's one way, like I gave you guys earlier, tracy.sharpe, SHARP. Tracy is TRACY. This is an email address, TRACY dot sharp, SHARP as in Paul E, at moneyladder.com. All right. She can help you reduce your debt. All right. Just saying, that's what they do. They call on your behalf. They say, hey, will you clip off some of this interest? Fine. Or some of this, whatever, IOUs. I don't know exactly how they do it, but it's along those lines. Just what the rich guys get away with. All right. That's what I'm talking about, MDA. A lot of people don't feel safe. That's the, and because we don't have financial literacy since people are 5 years old or 10 years old or anything, people are afraid because they feel like it's some sort of special knowledge, some sort of special thing only for rich and wealthy, just like not having a trust. It's like ridiculous. You should have a trust. All right. And again, I'm a fan of irrevocable trust, but the problem is you just should not be just throwing stuff in an irrevocable trust, because once you put it in there, it's in there. You don't get to just say, well, I thought I want to take it back out. Now, there may be a way you can take it back out, but the fact of the matter is it's there for a reason, to protect you, your assets, your beneficiaries have something and their assets are protected. So we're going to live in a litigious United States forever. So if you do have assets, people will try to take stuff from you because they can see it. You buy a house, you live in $1 million house, they can see you have that. So now they might be the ones that go, oh, I know where that guy, yeah. I'm going to drive in front of him, back up my car, and then get out and go, oh, my back is hurt. Oh my God, I'm messed up. Now all of a sudden, if you didn't have any video cameras around your car to show this, next thing you know, they're going to blame you because they're going to go, well, then why is the back end of their car messed up? And now you have 3-4 people that come out talking, oh, I hurt. And now each of them, maybe a couple $1,000,000, because for the rest of their life, they're going to be messed up, right? So now where are they going next? Attaching your $1,000,000 pads because they're in your name. And I don't want to hear my wife's name's on there too, so I should have half. They can only get half. That's not how it works. Whoever names are on there, if you get in a lawsuit, it does not matter just because one of you got in a lawsuit. Both of you damn near should have, because it's going to be gone. Simple. That's how this works. Cash in a bank. Who's never a name, if your name's on a bank account, they can put liens against you. Snatch your money out the bank account. That's how this works. And it's going to get worse. So that's how you protect yourself, because if nothing is in your name and you already gave it away, that's the point of the irrevocable trust. Now they can't come and do lawsuits against you because you don't own anything. The trust owns it. They can't do anything if any of the beneficiaries got into a lawsuit because they don't have assets. They're getting distributions from the asset. And because there's no monthly, no nothing, it's based on the trustee saying, okay, we can distribute anytime. We don't have to distribute at all. Now, all of a sudden, that's not going to be attachable either because you wrote your trust the appropriate way. So that's how the rich guys get to continue keeping assets in the family without any interference due to accidents or anything else. Okay? So there we go. See, Trump just put a cap on credit card interest rates. I don't know. That would be interesting. Hey, nobody gave me a zip code to check out some land. Okay, I'll put in some zip codes. Let me see. Let's go 399,578. 399. Let's see. I don't even know if this is a zip code. I just put in 39957. Let's see if that's a zip code. Let's go see. I guess not. All right, let's do it another way. Oh, here we go. Alabama. Ooh, yucks. 3,000 square feet in Utah, Alabama, $94,900. These are real estate investments. These are fixer uppers for sure. 3-bedroom, 3 baths, view listing. This is crazy. All right, let's go. Let's go check this out. I will check out this Trump thing in a second. Let's go see right here. This is what the home prices are. Let me go check this out. Trump puts cap. How's he do this? How? I don't know if you can't. Can you really do an executive order for this? 10% 1-year cap. He calls for it. He says, this is 3 hours ago, he will temporarily cap. I don't know if he can do this. Won't let U.S. public be ripped off. Trump puts 10% cap on. Ladies and gentlemen, who do you think this helps again? His rich friends, because they're the ones that have the wealth. Oh, man, are you kidding me right now? I don't mind it, though. This helps everybody by default for 1 year. But he's talking about 1 year. I don't know how he's supposed to do this. This would have to be he can't just do Uh, there's a Senate bill right now, 2025, 2026. It's a Senate bill that's capping it. Yeah, apparently, let's see what the status is. Sanders, sponsor of the bill, Bernie Sanders, February 4th, 2025. He introduced the bill. Uh, he introduced the bill in the Senate February 4th, 2025. Creditors that knowingly violate this bill forfeit the entire interest of the debt. Wow. This bill also provides a private right of action for debtors to recover interest. Oh my. The action must be brought within 2 years of the violation. In addition, violations of this bill are subject to civil liability. Oh my. But here's the problem, which is enforced by the Consumer Financial Protection Bureau, which Trump got rid of, and the Federal Trade Commission. What? Oh my, he's trying to take credit. That's interesting. I knew it was too good to be true. Dude ain't really like that. He ain't looking out for people. It's a good point, though. He's trying to use that to his advantage for political gain. Yeah, they gutted Trump gutted the Consumer Financial Protection Bureau, though. That's the problem. So anyhow, it's on the screen. You guys can. Oh, it's not on the screen. Hold up. I still had that on the screen. Let's go up here. You guys share tab. Okay, here we go. See, here it is. Right here, shown here, introduced in 2025, February 4th, 2025, 10% cap. All right. See, sponsor Bernard Sanders, Senate Banking, House and Urban Affairs. Last action, February 4th, read twice, referred to Committee of Banking, Housing and Urban Affairs. But you know why it didn't go forward is because he's an independent. GOP had no way of saying they're not going to take it up. So they didn't take it up for almost a year. Trump needs political points. So what does he do? He says, hey, I'm calling for this. Well, good thing. All the housing, well, that's the Senate. The House, they're not even trying to do anything. But now the House has something to do to help the American people. Be awfully nice. But you do realize if somebody else was on the other side of the fence was president, then this would have been a thing already. Yeah, he can't just do I don't think he can just do he can't do just what do you call it? Executive orders. So it's in the system. So all the GOP has to bring it to the floor in the Senate because whoever the majority is, they're the ones that can bring these type of bills to the floor or listen. You know, they got to go to the banking and all that, but they're the only ones that can do that. Whoever the majority party is, they're the ones. The majority party didn't want to hear it in February of last year. But now that the Trumpster needs some help with his political standing, he's trying to make it seem like he's helping people when this has already been out. But of course, he's going to try and take credit for it, which is what he does. Trust fund kids don't like to do that. MDA 0214, you manage it yourself? Yes, he does. That's what he was saying. The thing about it, Obsidian, is that you just what we talked about right now, like for instance, AG&C, right? And ORC and all these guys, they're giving like 13% to 15% dividends every year. You could have those in your 401k. You could have Apple in your 401k. You can have Tesla in your 401k. You can have Nvidia in your 401k. Whoever, AMD, it doesn't matter. If you want to produce assets that go up in value, then you stay with the top dogs right now. So you can always switch things around. All right. It's your 401k. This is what the hedge fund managers and the mutual fund guys do. They switch things around in your 401k. That's why the next year they might say, well, we want to add this ETF or whatever. They want to add a stock, ETF, whatever. And they'll ask you. Because remember, they usually have three choices. I can't remember. It was, um, I'll just go from growth to high. What did they used to call the high one? Basically, growth. What term would they use? Um, I can't remember the terminology, but anyhow, you go from just a growth, then they would go with high risk, right? High risk is what they would use. Growth, high risk, or uh, a tweener, a little high risk, a little growth. And so you had your choices. And most people, if you're younger, you might go high risk. If you're older, you might go with just growth or whatever. So that's how they usually did it. You can actually do it yourself and you know the numbers, right? That's the thing. You put it in a 401k. You set up your own solo 401k. You go to, like I said, I used to love TD Ameritrade, but now you go to Schwab, you can go to Fidelity. They both have solo 401ks that you can set up. If you have your 401k, then you just go up to your HR department, I guess. I think that's who you go up and see. Yeah, you go. No. Depending on how your company's set up, because they had a person at 401k when I was in a union, so I had to tell them, hey, I need to change. I need my money sent over to the 401k. I just can't remember who I went to go see, but nonetheless, you've talked to them. Say, hey, I want to send my 401k over to another 401k. So everything that's in yours, you can have sent over to your own solo 401k. Only 401k. You can't send it and say, I want to send it over to a brokerage account. Because if you do that, then they're going to tax you. You're going to have penalty. So you have to send it from 401k to a licensed, regulated place. You can't just say, I have a 401k. It actually is going to be tracked. They're going to send it to a place that's a 401k brokerage account. All right. So you can go to Schwab, Fidelity. I like both of them. And they have their own brokerage accounts as well on their site. So you can win that way too. So anyhow, this is what he was talking about. Let me go see this. Let me go see this right here. Yeah, thank you for the donations tonight. Obsidian Lion, the Code Keeper. Great conversation. Oh my God, man. High yield. There we go. High yield's another term they use. Um, I saw something he was talking about. Okay. Yeah. So again, giving Trump credit for something he didn't do just because he says it. It's been sitting at Bernie Sanders and the House and all that the Senate Banking, Housing, and Urban Affairs. It's been sitting there for almost a year. All they had to do was take it up, and then Mitch McConnell, if he still leads the Senate, he would have to bring it to the floor for a vote. Then you're going to have to talk to the other guys. This is so straightforward and simple, but Trump gutted the Consumer Financial Protection Bureau. So he gutted that. So that doesn't almost exist anymore. So this guts it. So in order for this to happen, he's going to have to, I, I don't know what they're going to do. That's the problem. Okay. Mr. Sanders and Mr. Hawley introduced the following bill, which was read twice and referred to the Committee on Banking, Housing, and Urban Affairs. Remember? Referred to. Okay? So that's all they did. They can refer it, but see, nothing's happening. See, they're over here doing amendments. Apparently they did. The annual percentage rate obtained for use of credit card may not exceed 10 percentage point, inclusive of all finance charges. Any fees are not considered finance charges under Section 106. So they have been going through something, but amended again. Striking subsections, effective date. The amendments made by shall take effect on January 1, 2031. See what I'm saying? This is what I swear, this is what GOP does. They're like, hell no. We ain't gonna let these dudes have this fun. Um, okay, man, this is craziness. So yeah, he's talking about it right now. So what this means is if the GOP they can actually take this up and handle. They have the House and the Senate, and it's 2026. There's going to be midterms coming up later this year, but I don't think this is going to move the needle that much. I mean, it'll be cool, but most people have credit cards and they're not going to trip. But it's only for 1 year, though. They're talking about this doesn't even take effect until 2031. Come on, man. This is crazy. But now they can speed it up because the House still has to do their fair share, and both sides get to do it. All right. So you guys can see right here. Here's the actions. Let's go look. Let's go see what actions happen here. Read twice. Okay. No biggie. Amendments, none. Oh, they have 3 co-sponsors. Let's see who the third one is. It's Holly Sanders and Kirsten Gillibrand. But look, she was added on October 8th. So this is still sitting here. Josh Hawley, all of a sudden on 2-4. Oh, Jeff Merkley. So we have 3 co-sponsors, and why don't we have Bernie Sanders anymore? Sponsor. Okay, he's the sponsor, and then we have 3 co-sponsors. So now we added a few more people, but only Holly's a Republican, Merkley Dem, Gillibrand Dem. Sanders generally votes with the Dems, so fine. Josh Hawley all of a sudden woke up one day and decided to try to do the right thing, I guess. But that's it. So we're not having any pushing where this isn't happening right now. This is not going down. All right. Let's go see. Committees, it's still here. Referred to. See, still there. These guys aren't doing nothing. Then we go to related bills. Let's see what's happening. Maybe somebody's doing something. Here we go. Here we go. Here we are. The House has it since March 6, 2025. It's just been sitting there. So both houses have had it, which is the majority owned by GOP. They never gave a damn because they don't. And I don't even want to get into it because you guys know how I feel about it. These guys just do anything to stop regular citizens from being able to get some breathing room. And they sat on it for a year almost. And so now, because they feel they're going to get wiped in the midterms, they're coming up with this weak 10% thing. That's not going to work. It's not going to cut it. What do you mean? What are you saying right now? Hold on. How did you take it out? Oh, you work for a company, right? You go see the guys that manages it, whoever the HR or whoever your union rep or whoever handles it. You tell them I want to send my 401k. I'm pretty sure you can just go to HR and they'll have a form for you. And you're gonna send them and you go see you set up your 401k. Your 401k will have instructions on how to wire 401k to 401k. So you won't have any tax implications. But you have to set up a 401k with somebody else. So whether it's Fidelity, whoever, whether it's Fidelity, Schwab, JP Morgan, Robinhood, everybody has Webull, everybody's managing money these days. They get a percentage. So, but it has to be a 401k account signed up. And if you have a 401k Roth, which you should, then you open a 401k Roth. No fees. 401 to 401k, no fees. All right? It's that simple. It's not that hard. Basically, you're just wiring money. They give you wire instructions. Just like if I wired you money or you wire somebody else money through a bank, it's the same thing. They're going to give you routing instructions for the wire, and then your 401k is supposed to wire it to this other location so you don't have any fees. If you withdraw it, that's going to trigger a penalty, and potentially you could lose to tax depending on the amount. So be very, very careful. Don't do that. All right. So that's how you do it. The Clarity Act, I don't like none of this. It better not go through. I'm just going to tell you right now, it better not go through. And luckily, there's some pushback. Let me go. There's some people. Let's go. This crypto stuff. There's some people that may not be aware of this Clarity Act. These dudes, man. First of all, I'm just going to tell you why I don't like the Clarity Act. One of the reasons is because I can have a concept of a plan with the Clarity Act, meaning I can come out with a token, a coin, an NFT, anything that's related to crypto. And as long as I collect, what was it? 3 million? I can collect up to $3 million, I believe it is, or was it 300 million? No, it's 300 million. I can collect up to $300 million in X amount of years. I think it was 3 years without any penalties or regulation or oversight because I have a concept of a plan. So all these people that's been getting ripped off by crypto because people say, well, I got this, I'm doing that, and we got this and we got that, like Debt Box, who says, yeah, our crypto is backed by this company. They would not be going to jail. Nobody would be going to jail because they didn't collect. Well, they probably did, but $300 million, I believe, was the cutoff. If you collect under $300 million, you ain't going to jail for concepts of a plan and selling people a con artist chain. It's crazy right now. You're gonna have to check it out yourself. That's one of the reasons, and that reason alone is enough for me not to even. You can't even take this serious. The whole point of crypto regulation was to make sure people can't get ripped off. But like I told you guys before, it's not based on people getting ripped off. What regulations are is to make sure those that adhere to regulations stay in their lane and keep their stuff where it's supposed to stay. So in other words, they don't really care about protecting you. They care about making sure that the rogue fools of bad guys can take your money without having any repercussions. That's what they're doing. Just like a bank can take your money, it's regulated. Just like a centralized crypto exchange can take your money, they're regulated. Take your crypto, they're regulated. Now these guys are going to call themselves regulating when you have loopholes like this in here. This is crazy. Basically, because we have a president who had his meme coin for him, his son, his wife, his other children. I'm talking about Barron, apparently, and also his older children. They have crypto stuff. And now they're writing laws saying, well, you can have up to $300 million just based on a plan and collect money for selling your tokens. I'm like, that is insane. Right there, that alone for me was like, that's DOA on arrival. Just that by itself. Guess what else? There's something, I can't see it here, but I'm not going to get into it because that's too much to read. There's something else in the Clarity Act. There's going to be stable coin involvement. And guess what else? I'm trying to figure out, how are you going to hold your crypto if somebody else is holding it? You have to relinquish it to someone else. That is a problem with crypto. You're supposed to have your own wallet. Now you're going to let the banks hold the crypto, your crypto. You've lost your mind. That is crazy. You've really lost your mind. You're already losing your mind letting central exchanges hold it. Now you're going to let banks? No way. No way. There's all kind of problems with this Clarity Act. It's a grab. They're going to steal your stuff. Or if they're not going to steal it that way, then they're just going to come up with meme coins like the president did. And like I said, his wife, his son, Barron, and his older two did some are in the middle of a crypto play right now. All these guys, because once you make that investment, just like his mobile phone BS, that was an iPhone, old iPhone from China. We all knew that. Just like the violin was, copy again, somebody else's property, made in China, doing all kind of crazy. Same thing. They're going to make these meme coins. People are going to buy them. They get to collect the money without delivering a thing, and it's legal. And that means you open the door for all the illegal scammers to do this legally without the FBI or anybody looking for them. That's why he got to pardon the crypto guy for Binance. Binance got out. There's a few people. I have to convert. No, you don't. No, you don't. Yes, I have Vanguard. They let you self-manage and convert to a Roth. Very good. There we go. I did not know that. That's cool. I have to convert. No, you don't. Okay, what do you mean convert? Explain what you mean by convert. You don't have to convert anything. You said you had a 401k. What do you, I mean, are you saying it's the other way? You're trying to figure out what to do when you have a brokerage account? Then you just set up a Roth IRA, a 401k, and then you send it into it because it's your own 401k. So you can send assets directly in. Still not a problem. Yeah. By the way, what he just said, convert to a Roth. That's what everybody should have. That's tax free, taken out. You're going to end up with some years you might have to take out money, but at least you are no tax, no capital gains. All right. So that's the way you do it, ladies and gentlemen. Again, you're getting high level information thanks to MDA0214 Obsidian, Line the Code Keeper. We're talking post retirement travel, EV Place. Everybody here is contributing. This is what we do every live stream, Monday, Wednesday, and Friday. So make sure you tell people to come here. This is the real stuff. See, this is the thing I don't like about the internet. This is why I actually started the channel, was because of things like this. I was listening to people and they would say things and I'd be sitting there like, that's not how that works. So I finally one day said, you know what, I got to come out here and tell people how it works, because you can always tell when somebody's never done it and they're leaving stuff out that is key. And so that's the thing, like how MDA, he does it because he knows exactly the importance of, when he said convert it to a Roth, he knows that's important. Most people would just do what they would leave it off. They go, oh yeah, I have a Vanguard. I put it in a 401k. And then people watching would go, yeah, okay, I have something. I'll send it into a 401k. But they didn't change it into a Roth. It should be a Roth because that's tax free. All right. That's key. That's a major thing. All right. If you do a regular 401k, you're going to have taxation. All right. Just keep that in mind. All right. So thank you, MDA0214, for adding that once again, because that's major. That's a key. I am through Empower. I don't know what that is. What's Empower? Empower Financial. It doesn't matter. Hold on, let me see something. Are you talking about Empower Financial Services? Transform financial lives to advise people manage investment accounts such as IRAs. Okay, it looks like they have an IRA. What's the problem? Are you okay? Obsidian, you got to make sure what you're saying. Are you saying you invest with them, or are you saying you actually have a 401k and you send money into your 401k with them? That, because there's there's a distinction, clear distinction. If you have a brokerage account, that's not a 401k. You have to have a 401k. All right. So let's see. I don't know who Empower is. It empower.com? Let me know. Because they do say they manage investment accounts such as Ira's investment or whatever. So, what I'm saying right now is it seems like you're saying you don't have a 401k because otherwise it would be just a simple transfer. And if it's in a brokerage account, then you need to find out if they can turn it into a 401k for you. Or if it is just a regular brokerage account, then it doesn't matter. Then you just need to send it into your creating a 401k account and send it to your 401k. Simple. Either way, I don't see why it would matter. Okay. I'm picking up what you putting down, Eric. All right, cool. Cool. Glad to hear this. All right, glad to hear it. Because it's not that complicated, really, unless you don't. With Vanguard, I just clicked a button for self-management and they sent the money to Charles Schwab. There you go. And then Charles Schwab had your but you already had the 401k though, exactly. You just had this you've already had your 401k set up at Charles Schwab. So then it's just a wire transfer under 401k wire. So it's not just treated as like a money wire. So that's the difference. A lot of people again don't realize you can't just if you don't just take your 401k. I've had people that I worked with in the past when I was in the workplace, and people would say, I withdrew my 401k to put it in another 401k. And I was like, who told you to do that? And they go, I know. I had to give up like 20%, 25%. I was like, Jesus. I was like, you could have just transferred it direct. And they're just like, what? No, they told me I had to take it out. I said, no. Yeah, it depends on who you're with. They like the financial business is no joke. They got robbers there. They will steer you wrong to either keep your money with them or take fees because they know you're leaving. So once you know the rules, it's pretty simple. And MDA that's how simple it really is. 401k to 401k. Simple. There's nothing to do. And yeah, I like I said, I haven't transferred 401k to 401k. Now I would imagine it's even easier because now you use the internet. They're connected. So everybody knows everybody's because it's regulated. So it's like that new thing when you when you send stuff online and then they look for your bank, if you're using your bank account, if you got to attach it, plaid, right? Same kind of thing. They're all regulated. They're connected. So all you got to do is prove that this is your account. They connected, and now you can send money back and forth. Same thing. So makes sense. It makes perfectly good sense. Cheese recalled nationwide for listeria. Oh no, not this. Don't do this to me. Oh my God. Okay. I can't log in, but we're going to wrap this up shortly, ladies and gentlemen. I have to give me a little bit of water. This has been a great live stream. Once again, helping people. Okay. Boar's Head, Members Mark, and the Ambrola Company, due to potential listeria, already in 2026. Boar's Head, Members Mark, Sam's Club. That's crazy. Return to store for refund or throw away. Visit FDA. I wish I had a link. Recall page. Where's that link? Don't have it. Cheese recall. Oh my, it's the Sam's Pecorino Romano. 12 units per case, 1.5-pound plastic bags of grated Sam's Pecorino Romano. Wow. Jesus. 11 hours ago. More than 11,000 cheese products recalled. Jesus. Okay, ladies and gentlemen. This is cute. Thank you, Brian. This is outrageous. This is where we go. Third world country, ladies and gentlemen. You just don't know it yet. Some people are finding out real fast that they live in a third world country, while others are going to find out shortly. Oh, this is bad. Okay, this is WGN. What is this? This is Chi-Town. It didn't go directly to it, so I'm not going to look around. Um, they got all kind of stuff happening out here. Here we go. Is this the one? Let me see if this. Ladies and gentlemen, that's the link to the cheese. Yeah, 1,000 bags were recalled. That's what they said. That's crazy right now. That's crazy. How did that come back? That's interesting. I love this channel. Obsidian Lion Code Keeper. Thank you so much, man. And thank you again for those two $10 donations apiece. I humbly appreciate it. And thank you for your support over all these years, man. Very, very happy to see you again. And once again, hopefully, between me, MDA, we've been hopefully getting you a little straight on the 401k. Yeah, what happened? Exactly. What's been happening? You guys know we're tracked, all right? Let's go. Let's call it what it is. We back now. Yeah, we're tracked here on the Stop Struggling Now channel. Because these guys are like, you guys, like I said, you guys don't know my history. But my history is one that's helped people. And back in the day when there was no internet, I used to have hold seminars, like I would help people get real estate. Because most people back then thought that they had to have a mortgage, and they didn't understand that you can assume loans without. So, you know, a person, uh, let's say a person has a house, and it would be, back then homes were like 150 G's, something like that. And a person would have a loan for like 120, 110. They would be in financial straits, so to speak, and they really want to sell their house. They owe like 110. The house is worth 150. And so I would say, and the person would say, well, I don't really have 20, whatever it would be, $30,000 to put down. So I would say, well, who says you need 30,000? The person wants to sell the house. Why don't you just make a deal with them and assume their loan? And they were like, what do you mean? You can do this? I said, yeah, your credit's good. So you want the house. Why get a new loan? If you can go to the person and say, hey, your house is, you owe 110 and you want 150, but I'll buy your house for 135 and I'll give you 25 G's cash and I'll pay the 1%. What's the problem? And people be sitting there in the audience like, and I didn't have a large group. It'd only be like 20 people or something, 15 to 20 people. And people would be like, you can do that? I was like, you know what you could really do? If you have a person with the FHA and all this, then you can just do 3%. And they'd be like, what? I said, yeah, you could do like 3.5%, point fee, whatever, done. And they're like, I don't have to put 10% down. I said, no. It was all kind of stuff like that because there was no social media. So people didn't understand that they didn't have to go with the go down and get a mortgage routine. They could just went directly with people. And the people would be like, is this for real? And then, of course, when people would do it, then they would be like, oh my God, I can't believe this actually happened. This is for real. It's legit. I was like, yeah, you've been fooled this whole time. The people are selling their house, whatever their mortgage is. You can make your own deals. You don't have to go through get a mortgage. I said, you can just deal direct. I mean, you're still going to have to qualify for a loan. So what's the difference? Why not just give the homeowner their money direct and take over the loan? Why even bother? Because again, we're in a situation like right now where people had well, I'll just use the example 2.5, 2.7% loans. So why would you get a new loan for 5.99%? And by the way, it works to this day too. So why would you go get a 6% loan if somebody's holding a note that's 3.9 and you're going to buy their house anyhow? And if the home price is 429,000 on average, that's the median price apparently right now. And they have a loan because you guys know the first part of your loan is interest. So now they owe 370, 380 maybe. And so they're saying, well, you got to put down 20%, 80 G's. You could just go to the people and say, well, you owe 350. I'll give you 60 G's and take over your loan. I don't have to give you 80. I'll just give you 60 G's. If I can qualify for your loan, I'll try and qualify for your loan. I got good credit. Depends how serious people are. They'll go, oh, well, I had my house on the market. You just go, I had your house on the market for 8 months. So you're not going to get your 420. Clearly. You owe 350. So how about I qualify for your loan? I give you 50 G's. I buy for 400. You got 50 G's. Done. They may say yes, they may say no. But all I'm trying to say is that is an opportunity, and you don't have to come out of pocket 80 G's because you're not going to buy it for 420 or whatever, or more than 80 G's, 85 G's plus point. So call it about 90 G's, right? Simple. You can do the same thing right now because you want the other mortgage. You don't want to create your own. You want to go get the other one. All this stuff I used to do. All right. So again, ladies and gentlemen, when you do the damn thing, you can tell people how to shortcut systems and you can actually get better deals this way, especially in a situation now when people have 8 months, 9 months, a year that their house has been on the market. They reduce the price and they still have no takers. That means the value of the house is not worthy of somebody buying. But then somebody else comes in and says, hey, is your mortgage assumable? Most mortgages are, as long as you qualify. So that gives you a leg up. Just saying. These are just powerful things that most people just go, I got to go to a mortgage company or something. You don't. You can just call up their bank. Their bank will say, well, here's the paperwork. Fill it out. If you qualify, we're good. And then they just go through a closing agent. I mean, you got to do your closing legitimately. Or in this case, it's even simpler because the bank will probably handle it themselves. They'll be like, all right, you qualified. You now take the mortgage. And I would go through a closing agent anyhow because you want to make sure that I get paid if I entered into that agreement. I wouldn't just do it off the street. So that's one thing. All right, ladies and gentlemen. This is how you make money in this economy right now because you're ahead of the curve. If you decide to buy a house, that's how you do it. You don't deal with 5.99. You go find a house that you want to buy and you ask them, hey, is your loan assumable? And they say, oh, well, yeah, my mortgage is 4.2. You would take that too, wouldn't you? I'm just saying. These are the little tricks that you can do. It's nothing major. It's normal. And this is what a lot of wealthy people do. When they talk about exchanging, they get a house and it's, some stupid number, $20 million and all this crazy, right? They usually have some sort of special deals. All right. All right. I'm going to get out of here in a second. Okay. I see one more. Tamales recalled. Oh my God. Yeah. By the way, there was a list of all kind of recalls. Where did I see this? this at. While I was doing my search, it came up, but I wanted to go to the cheese because I found that one. But this is outrageous. Yeah, food and drug, Ambrola. It's very bad. 6 states have listeria outbreak. 5 cheeses been recalled due to E. coli. This is, I told you guys, did I not tell you? You live in a third world country, but you don't know it yet. Did I not tell you guys about this a year and a half ago? When, well, actually, it's not a year and a half. It's a year ago now because Trump won the thing, and I said if he does what this FDA thing and USDA when he says he's going to gut them, we knew we were going to have a higher recall rate of bad food. And when you start doing deregulation of inspections and things of this nature, you know the outcome already. So again, you might want to consider getting healthier choices and studying, because if they take away your medical, which I hear that the GOP, they had some defectors and it looks like the subsidies might have passed. I don't know. I haven't heard touting about it. I can't even watch the news anymore because it's so disgusting. So disgusting. Okay. Let's go. Okay. By the way, this Empower thing is interesting. I don't know who Empower is. Never heard of them. High yield cash wealth. Okay. It looks like Wealthfront. Yeah, it looks like Wealthfront. So 19 million people. Okay. Tools. Savings, debt pay down. Yep, there's debt pay down. Good. Net worth, retirement planner. Cool. But if you actually have a 401k again in there, and even if you don't, it still works the same way. You would set up a 401k, then you got to import your assets into it. So it ends up working the same way. And so either way, you set up your own 401k, Roth, IRA, no taxes on the way out while it grows. That's what micro strategy does. Sailor and a few other of these high-end guys, they have their trading account, so to speak, investment account, and a 401k. So any of the profits that it grows to, because they've been holding these for 20 years or more, then they get all of that. So that's why they like putting Bitcoin in these, because the value increases, so they don't have to pay the tax on it. All right, Brian P. says in your email, okay, tamales recall. This is crazy. This is crazy. How do you, well, actually, I know how to, if you know how to, if you know how to make tamales, that's a shock. It's no shocker that there would be a tamales recall. Okay, Primavera Nueva tamale recall in January 2026 for potential listeria. Flavors sold in California and Nevada. Oh, Primavera Nueva Incorporated. Jesus. Roasted green chili and jack. Black bean bonanza. Hold on a second. Let me see if I can get a, yes, we have a page. In fact, the recall was yesterday. Tamales. Here we go. Grow your own food in your backyard. Get a box. I'm just advising. Also, consider the water that you use to feed it. Tap water. You might have to bring in some water. I mean, your water out of your tap may be contaminated of some sort. So again, you got to try and have the cleanest things of all. Medical is being decreased for American citizens. This is by design. Population is being hurt. So just keep this in mind, all right? Just keep all that in mind. I want to let you guys know I got to run. My shoulder's getting a little tired. I'm sitting in a different location. I don't have a backstop. So again, we'll see. I wanted to do something a little different while I'm here, but the TV, these guys have old school TV, so it doesn't have Wi-Fi. because I was going to turn around, put it on the TV so the background would show the Stop Struggling Now YouTube channel page or another page. And that would have been cool, but can't do it. So figure something else out. But I can't upload a picture. All right. Nonetheless, that's all we have for tonight. Manipulation for mortgages can be in your favor. This is the time. So I gave you guys one little thing you can do. If you are into buying homes, just buy an upscale luxury home and make sure that whatever home you buy, ask the person if they have their list of upgrades, list of repairs. That's always been one of my thing. And whenever an owner says, here's my book of everything that I've ever repaired on here. Here it goes. If there's a warranty still left, here you go. I'm like, oh, hold up. Let me see. Do I like this house? Let me make sure I like this house good enough. And then I'm going to live here. Because if they have all that, that goes a long way because now you have a trail. Just like a vehicle, maintenance and upkeep. If people keep track, that's why I always keep track of maintenance, upkeep. I have all the records, how much it was paid. And then, so it also shows who did the work. And sometimes the businesses are out of business, but nonetheless, at least there's a track, a trail, no part numbers and things like this. So that helps them in case something else goes wrong, because they do every 10 to 15 years. So if the house is 25 years old, 20 years old, and you repaired something 10 years ago, that likelihood of something happening 10 to 15 years later is the same rules. All right. So that's why it's very valuable to have that. So upscale luxury. But again, you have a way to do things right now. You can actually take over payments on a person's house if you qualify. It's that simple. You don't have to go through mortgage companies. So think about that. Just saying. Just saying. All right. Because that's the cycle I believe we're in. So you get to build your wealth. And as they reduce the mortgage rates, that means the value of other homes are going to rise to an unbelievable level. That's not sustainable for ordinary citizens. And then when there's a crash, which is going to happen, I predict we already do 1 year. So I got 2 years now. So I always have a runway for you. So yes, at the December 31st, 2026, you should have your credit score at 775. If not, if before that, and that 0% for 36 months interest only, or 0% interest for 36-month credit card comes where you can send any outstanding balances to that card, that's what you want to do. Get 0%. All right? For 3 years. That's what you want. They're going to come out. 24 is already here. But you need a good credit score. I wanted 775, just so you guys understand. You can do 750 right now. That's probably going to be a thing too, because a lot of people don't have great credit. So, but you want 775 so you can have the best or higher. Because if there's something that pops up that's really crazy, like, I don't know, we'll give you $4,000 or something. I mean, who knows? All I'm saying is crazy stuff is going to happen. All right. Because there's going to be a meltdown. You can't keep manipulating the system, the financial system, without repercussions. Because it's not built for manipulation. It's built on supply and demand. That's the simplest form. Once you try to go, we're going to spend $200 billion so we can reduce the rate, that's artificial. So there has to be a mean. So basically, if a stock market trades within this value, there's a trend within this value, right? Something goes outside upward. That means up here, that's an anomaly. So if it goes up past here, the odds are it's going to keep going up past there to reach a certain point. So you could be making money from the time the break comes. So let me see. I get my levels right. When it starts breaking this way, now all of a sudden the odds of it going up higher is even more because it broke outside of the structure, right? That's just a way to look at it. Same when it goes down below this levels. So you can make money on either side if you're into stock market trading, right? So think about that. This is where we're at right now. There's going to be anomalies that you can exploit to build wealth. This may be your last time because the haves and the have-nots are going to be a wide margin. We already have a wide margin, quite frankly, but instead of 50%, the bottom 50% having hardly any wealth, it's going to be the bottom 60 to 65% is what I believe is going to happen. There's just no way around it. By the way, I want to congratulate Jesse the Body Ventura. That was the governor of Minnesota. Today, he came out on an interview, came out from his high school. He went to Roosevelt, I think it's called Roosevelt High School in Minnesota. I don't know what city, but it was called Roosevelt High School. And I could not believe the words coming out of his mouth. He said, what you guys have heard me say over the last 5-6 years, he said the magic words. He says, you know we live in a third world country right now. I said, oh, no, he didn't. Yes, he did, ladies and gentlemen. Look it up. I've been telling you guys this because he says, I went outside in Vietnam War. I was in a third world country. This is the kind of stuff that they have going on. I said, ooh, eeks, yikes. Welcome to the party, Jesse the Body Ventura. You guys know this is SSN Nation. I've been telling the real deal for a while. People didn't want to hear it. Now, all of a sudden, people are starting to say what they should have been saying all along. I've been telling you guys this is where it's headed because we're acting like it. All right. Protect yourselves out here. Protect your assets. Okay, covered calls, look them up, especially if you own a lot of stocks. There we go. There goes another hint, ladies and gentlemen. Safer than stock market trading because, again, I get bothered when I see every time I turn my phone on because I started doing stock trading, I get these things. I was like, what are all these people doing? I mean, all these people are telling me, oh, yeah, you can learn how to trade from me. You can do that. I'm like, hold up, man. That's a red flag. That means there's a lot of people. Well, there is. We already know 90 to 95% of people are losing. But the fact of the matter is that's why you have all these people saying they can help you. So that means it's very, very hard to maintain this. And they're taking advantage of people by saying we can help you. When in fact, I have no proof that these guys aren't part of the 95% losers or 90% losers. So again, I'm taking heed with MDA0214 when he says covered calls, look them up, especially if you own a lot of stocks. He's saying you can make money with those a lot safer. And anything safer because, again, when you have a high rate of people losing, and then I have people selling picks and axes because it's easier to sell picks and axes than to stake a claim and try to pan for gold that may not be existent. So they already have money in the bank because they collected money when you said, I need a picks, I need a shovel, I need a axe, I need a pan, I need some water, I need some food, I need a knapsack, whatever. The point is they're sitting there comfy while they're collecting because they have thousands of people coming in over the year to go panning or looking for gold. But they're selling the utilities, and that's where the money was made. Don't be fooled. The gold rush is a thing, but how many people did not earn a thing? They won't tell you about that number. So again, I'm always cautious when I find way too many people trying to sell courses, sell books, sell this is how I do my indicator. Another guy does on my indicator. Fair enough. Everybody's successful a different way, but that doesn't guarantee anything just because you know an indicator, just because you know how candles work. And by the way, if you want the Candlestick Bible for trading, if you're interested, again, you can go to stopstrugglingnow.com. Up at the very top on the menu, you'll see Candlestick Bible, Trading Bible. On a text, just click on that and you can download the PDF. But that does not guarantee that you're going to be successful. There's so many different nuances that you have to study this. There's one other thing that I've noticed as well. There's a lot of people who are candid and they say, I've been trading for 5 years. I've been trading for 7 years. And just now I feel comfortable after losing. I mean, my friend's been trading for, this is 2026. So that means 8 years, 8, 9 years. And they're still telling me about stuff. We do things differently like this now. We do that. I'm like, what the heck? And I'm supposed to be thinking I'm special. I'm not thinking I'm special. That's why I think I need to study a lot more, even though I don't feel like I want to do something crazy just yet because I don't know. There's this thing about experience. Once you see things more times, you may act differently. So I'm just doing a little here, little there. That's it. I'm not trying to do 1,000, 3,000 a day, 10,000. I'm not trying to do none of this. I'm not doing prop firm stuff. I'm doing high risk. This is the way I see it now. I didn't think it was high risk before, but now that I know what people, when there's too many people with an office setup versus trading setup and masking what's happening is another thing. Um, so once again, we'll talk about that another day. But MDA, thank you so much for your contributions. All right. I really want to see DIM Pals again because he's doing something with Max ETFs, which I wanted to find out what he's doing. That could actually help people as well. So hopefully one of these days we'll see him on the channel again and I can find out because I know he does options trading. So I don't know if he's doing covered calls or what he's doing, but I'm curious to find out it specifically because there's so many different levels, so many different things you can do with the stock market. And that's why it's probably fascinating to millions of people because they do hear people, oh, yeah, I got $200,000 yesterday, or I got $20,000 or 10 or 5. Doesn't matter. Somebody saying that gets people's attention. And again, we know maybe that day, but we don't really know every day when they're trading, right? So again, be very cautious out there when you are deciding to be in the stock market a different way. Safe way, you know what dividends are paying, you can invest in. You know what stocks, you check their financials, you check their records, see what their incoming revenues are expected, see what analysts say. You can do a bunch of stuff to figure out if you want to invest in something. Is this in an upper market, right? Is this in a market that's hot? Like AI obviously is hot, right? Do they really have something that gives them some leverage for competition? You have to study. Then you make your investments accordingly, right? Same thing happens no matter what you do with financials. You have to study. You have to understand, is this for you? Right? So just keep that in mind because manipulation is going down, ladies and gentlemen, and you get to be the beneficiary of it as long as you know what the manipulation leads to. Hopefully, I've helped you with that a little bit tonight. Just keep in mind one thing. I love you guys very much. I appreciate your support over all these years. And please like, subscribe, and click the bell below so you get the latest updates. And you know it's hard out here. I don't have to tell you. The numbers do not lie. And by the way, the numbers I have are for 2024. I know with tariffs and an increase in price and devaluing of currency, I know the number of 80% living paycheck to paycheck is higher. I know it has to be close to the Canadian 85%. It's got to be 80 to 85. So we know it's going to be 82, 83, 84, somewhere like this. I would not be surprised. That means 8.5 people out of 10, 85 out of 100 is living paycheck to paycheck during the month of the American people. That is pretty serious when you start thinking about it. That means 15% are not. And 15% means in a population of 350, do you understand that we're talking about 50 million people are not and the other 300 would? But I'm not going to use that number because there are people under 18 who would not be in the workforce. So that's why workforce wise, we have 175 to 185 million people. Well, I don't know now, but that's what it used to be. So now you understand it's even more dire because you don't even have 350 million people. You really only have like 100. Let's use the higher end number, 185. Out of that, you have 35 to 45 million people that are safe. The rest, 140 million, 130 million workers, are under siege. By default, the other 160 to 170 million people are in never, never land. Bad to worse situations financially. So once you understand where we're going. When you start looking at numbers don't lie, right? So you start going, well, wait a minute. If we only have X amount of people that's comfortable and we have all these people uncomfortable, there's going to be more homeless. There's going to be a lot more of all this, regardless of home prices. That's not going to help people. The only thing that helps people is manufacturing facilities that pay livable wages, jobs that pay livable wages. Where are you going to get those from? You can't print yourself to new jobs. That's not how this works. That's why it always cracks me up when the Federal Reserve chairman gets up there. Jerome Powell's been one for a long time. He's been there for like almost 20 years. But he's the latest one, right? He sits there and says, well, the job market, we need to work on that. I'm like, how are you working on that? What are you talking about right now? Printing money does not create jobs. So I'm sorry. And the misnomer and people believing that garbage just annoys me. You can't print money and create jobs. That's not how that doesn't even work. The money they're printing does not even go to anybody. It goes to corporations. It goes in their coffers where they can buy assets. Bail corporations out. They're not bailing people out. They're not they're not creating a manufacturing facility and employing 1,000 people who get paid $66 an hour. They're not doing that. This is like a joke. But what they are doing is making taxpayers foot the bill at 4.1% for bonds. And then they're turning around and giving these corporations, buying their stocks and giving them loans, and banks and all these guys at 0% to 2.5% loans, which again, how does that increase the job market? Doesn't. Simple, ladies and gentlemen. You can see how this goes down, but you got to ride the wave. And that's why you need to get your wealth while you can, because it's going to be cut off one of these days. I'm not saying like in the near year or two. I'm just saying there's going to be where there's 90% of people are living paycheck to paycheck, and the top 10% are going to be up there with all the wealth. Why? Because when you consolidate and allow monopolies, one guy can control 5 different corporations. One corporation can control 5 different corporations in an industry. So no. Uh-oh. Let's see. My mic changed. That's interesting. Hold on a second. Got all kind of changes that's been going on behind my back. Okay. I got some messages. Anyhow, I'm going to wrap this up. It's 3 hours and 22 minutes. And again, be safe out here, ladies and gentlemen. You're being manipulated, and you need to buy real assets. A little bit of gold, a little bit of silver. Have your duffel bag of cash ready in case you need to exploit some investment. You need to have your Robinhood, Webull, Moo, whoever you use, get a brokerage account, get your free shares of stock. In fact, I did not put that in tonight. So let me get that down there for you. And there's also something like Wealthfront if you want to get in and get somebody else to manage, like an ETF where you give them your money and then they manage it for you. You can do that. Nothing wrong with any of that. Let's see here. Here we go. Robinhood, Webull, all them. They're in the chat room right now. All right. Just put them down there. So everybody that watches this in replay, make sure you hit the comment section if you don't see the live chat, and then you swipe left. That's how you get the live chat up. All right. Make this nice and easy. All right. I'm going to wrap this up tonight. We need a top-down analysis. Okay. Come back on Wednesday night and tell me what you need a top-down analysis of, and we'll do it. All right. I could do videos, but again, when I do normal videos, the videos don't really even get, you guys got to check out the videos. They only get like 20 to 50 views now since we came back from being monetized again. All right. They're even worse than before, by the way, because I'm talking about little different things now. We used to talk about specifics, real estate, credit. It would always be specifics. Now it's like a wide brush, so to speak, and I guess they don't like that, right? It doesn't fit the specific, but it's always financial. So that's what we do. So come back on Monday night at 8:50 p.m. Eastern Standard Time, and we'll talk about the top-down analysis on anything you want to talk about. Just let us know. We'll go to we have a lot of investors here, so they can help and guide a lot of people. And everybody needs that more than anything this year, because this is going to be the year of the run-up. S&P 500, all the stock indexes are going to rise. Gold is going to rise. Silver is going to rise. Why? Because the rest of the world doesn't believe in the US dollar. It's no longer a safe haven to be in the stock market in the USA. So that means they're going to transfer their bonds, withdraw, and go buy gold and silver, precious metals, and make investments outside of the United States into emerging markets. And guess where that emerging market is? China. They're the next up. Okay, just keep that in mind. China is not what people believe it is. These guys are on par with the US as far as financials. The only difference is they don't have the Swiss system, and they don't have the banking system, and people don't feel comfortable with people put money in the Bank of China. But the point I'm trying to make is the banking system is built for United States control. That's the one thing. So the United States can cut off everybody, but until you can't. That's why BRICS is formed. That's why EU was formed. All of this is a separation just in case somebody goes rogue, which United States could. And then they say, and then they're hemmed up because they have banks here. They have money in their banks here. And it could be just like what we did to Russia's take their money, just like we did to Iran, took their holdings, right? Just like Britain did to Venezuela, gold. They kept their gold. Again, not your keys, not your money. You don't put your monies in banks and then ask them, hey, man, I need my money back. And they say, F you. No, that's why. Again, people aren't paying attention. They do it to other countries. They do it to their citizens. And all the countries have done this to other countries, keeping those countries' monies because they invested in the United States. They have, $200 billion worth of gold in the US because it's a safe haven. Until it's not, until you ask for it, and then they say no, because you attack somebody, right? So again, pay attention. That's all I have to say. It's not safe out here. Not even safe for me out here anymore. This is crazy. I'm just kidding. I'm kidding. All right. I'm hard to find, but nonetheless, again, be safe. Have a great weekend. And again, I'll say the magic words. Come back on Monday, Wednesday, and Fridays. And with all that said, keep your head up, keep moving, and I'm out.